So first of the chapter that we are taking for the marathon revision, just for your feel good, is GST in India. When you talk about GST in India, let's understand DT and IDT. What's the main difference between DT and IDT? Okay, what's the main example of your direct tax? Best example, income tax. Indirect tax, best example, GST as well as your customs. What is the main difference between DT and IDT? Main difference. When you are talking about your direct tax, burden, direct tax, burden shifted or not shifted? Burden cannot be shifted. You have to bear the burden. Indirect tax, burden can be shifted from the manufacturer to the wholesaler, wholesaler to the retailer 1, retailer 1 to retailer 2, and finally to the end consumer. And don't call it as customer, it is end consumer. Who bears the final pain of indirect taxes? It is the end consumer. Now, what are the other differences? Which tax is progressive in nature and which tax is regressive in nature? Direct taxes, progressive in nature. Direct tax happens to be progressive in nature. More the income tax. Lesser the income, lesser the income tax. Whereas your indirect taxes, regressive in nature. Irrespective of your earning capacity, whether you are rich or poor, indirect tax will be the same. If a rich and poor goes to a shop and purchase the same item, indirect tax will be the same. And when you talk about the main point, when you talk about direct tax, it is on what? It is on persons, including artificial persons. And indirect tax happens to be on goods and services. It is on goods and services. And the main indirect tax happens to be goods and service tax. Main, not the only. Main is goods and, which is named as GST Act. Correct? CGST Act, IGST Act, SGST Act, etc. etc. Correct? Now, once you know DT and IDT, you clearly know the features of indirect taxes. Features, the characters of indirect taxes. Indirect taxes on what? Goods and services. Is it an important source of revenue for the government? Very important source of revenue for the government. Now, the revenue of indirect tax to the government is more than your direct tax. And fortunately, might be not relevant for you, but now in the new syllabus, which is going to come from May 2024, indirect tax marks shiftage in your inter is now 50. It was 40 and 60. Indirect tax was 60. Indirect tax was 40 and direct tax was 60. Now it is 50 and 50. So that is always the indirect taxes actually having a major contribution. They have made it equal, 50 and 50. Now coming back to this point, the coverage of indirect tax is wider or direct tax is wider? Indirect tax has got a wider tax base. I am not talking about the return filers. We are talking about the payers. The taxpayers of GST are more than the taxpayers of income tax. Taxpayers, not the return filers. We are not focusing on the PAN card holders. We are focusing on the taxpayers. Now, in indirect tax, what are the main things that differentiate indirect tax from direct tax? That is shifting of tax burden from the manufacturer to wholesaler, wholesaler to retailer, and finally to the end consumer. The person who bears the final burden is the end consumer. And as the end consumer is not clearly aware that he is going to contribute the indirect tax, there is no direct pain, no perception of direct pinch. Manufacturer will pay, collect it from the wholesaler. Wholesaler will pay but collect it from the retailer. Retailer will pay but collect it from the consumer. Is finally bearing the burden but is not directly paying to the government. So there is no perception of direct pinch, which is there in your direct tax. It is not there in your indirect tax. And that being the case, it is easy to collect GST rather than to collect income tax. And when you talk about your indirect tax, it is inflationary in nature or regressive in nature or both? It is both. It is inflationary in nature as well as regressive in nature. Both inflationary and what is meant by inflation? If the rate increases, 5% changes to 12, 12% changes to 18. Directly it will impact the price. If it is directly going to impact the price, the end consumer is going to feel the burden more. So initially it is 100 plus 5. If it is changing to 18%, the price will become 100 plus 18. 100 plus, it is reverse also. If at all the rate is 18, tomorrow it is going to be 5. 100 plus 18 will become 100 plus 5. So it is inflationary in nature. Is it regressive in nature? Yes. Understand that when you're talking about regressive in nature, the rate is the same. 100 plus say 5%. But the same amount of indirect tax, 5 rupees, will be collected from the rich as well as from the poor. So it is both inflation in nature. Inflation means change in rate will change the price. Regressive means that let the rate be the same, but the same tax will be paid by the rich and the poor. And the final feature of indirect tax is it promotes social welfare by having a very high rate of tax on sin products, be it your tobacco, be it your liquor. All these items will have a very high rate of tax. Understanding the basics of economics, more the price, lesser the consumption. More the price, lesser the. These are all the features of your indirect tax. What we have seen is direct tax versus indirect tax, then comparing the features of your indirect tax. Now, indirect tax was earlier. What was your indirect tax earlier? Before GST, it was all VAT, CST, excise, service tax, etc., etc. Your different indirect taxes. Main taxes being your VAT, CST on sale, excise duty on manufacture, service tax on your provision of services. There are other small indirect taxes also, entertainment tax, luxury tax, betting, gambling, lottery tax, etc., etc. But these are the main taxes. And finally, when the output was there, you had CGST, SGST, or CGST, UTGST, or IGST. If it is intrastate, CGST plus SGST. If it is within the state, CGST plus UTGST. If it is within the union territory. If it is interstate, IGST. And on certain goods, you will be having compensation cess. Compensation. So it will be C plus S plus compensation cess at times. C plus U plus compensation cess at times. I plus compensation cess at times. Now, what was the entire process of bringing your GST? If I were to summarize your entire process of bringing GST, there were two major steps. In between, there was a small step. One, there was constitutional amendment which was required. And thereafter, there was a GST council which was born, which took up to the second step. And finally, you had the acts in place. Finally, you had the acts in place. This was the entire sequence of bringing your GST. The first step was amending the constitution, and the next step was bringing the act. But who's going to bring the act? It was your GST council. GST council. So that was the entire step. Now, before these steps, there were certain attempts to bring out the GST. Right back in 2004, there was a committee called as Kelkar Task Force, which recommended GST on national basis, fully integrated GST, which never came out. Which means only one GST, which is not the reality. Rather, if you go a bit back, it was in 1999 when the former Prime Minister Atal Bihari Vajpayee said that we are going to bring GST. So it starts, at least in Parliament, the discussion was started on 1999 in Parliament. Does it mean that GST discussion was only started in 1999? No, it happened even before, but not in Parliament. Right, so 1999, former Prime Minister Atal Bihari Vajpayee said that we have to bring GST. Then 2004, Kelkar Task Force was formed to bring out GST, to give recommendation on GST, and it recommended fully integrated GST on national basis. The next of the step was in 2006-07 when the budget was presented. The former Finance Minister former Finance Minister Chidambaram, P. Chidambaram, said that we'll be bringing GST right from 1st of April 2010. So he is telling this in 2006-07 and promising to bring GST on 1st of April 2010. Attempt was made to amend the constitution, but it never happened in reality, which means bill was there, but Constitutional Amendment Act was never there. Therefore, these are only the attempts which were initially made. Then the new government came in, then these major steps started. What was the major steps? First, amend the constitution, then bring the amendment of constitution, followed by passing the act. When you talk about amendment of constitution, your 122nd Constitutional Amendment Bill 2014 was converted to 101 Constitutional Amendment Act 2016. 122nd Constitutional Amendment Bill 2014 was converted to 101 Constitutional Amendment Act 2016. Who was to do that work? It was to be done by whom? Both. You are talking about your Parliament and Legislature of States. Parliament and Legislature of States. When you talk about Parliament, obviously we are talking about your Lok Sabha and Rajya Sabha. Right. So it was tabled in Parliament in December 2014, the moment the new government came in, passed by Lok Sabha in May 2015, Rajya Sabha in August 2016, 50% of the states, legislature of states ratified in September 2016. So this was the sequence. It was tabled in Parliament in December 2014, passed by Lok Sabha in May 2015, Rajya Sabha in August 2016, and 50% of the legislature of states in September 2016. And finally, your 101/22nd Constitutional Amendment Bill became 101 Constitutional Amendment Act on 8th of September 2016. 8th of September 2016. It became your Constitutional Amendment Act. First step was done. Your first step was, and immediately within a week's time, which means 12th September 2016, the provisions of GST Council were made and given to the President for his assent. And finally, on 15th of September 2016, 15th of September 2016, your GST Council was there. And it had its first meeting. GST Council was in fact there. So what was the connecting point between the amendment of Constitution bringing the Act? What was the connecting point? Between your amendment of Constitution, and bringing the acts, it was GST Council, because GST Council is only a committee which can bring your act. So what was done? Immediately when your Constitutional Amendment Act 2016 was ready on 8th of September 2016, the first of the work was to make effective its council, GST Council. 12th September 2016, the provisions were ready, and 15th September, the assent was given by the President and GST Council started functioning. So 15th of September 2016 is when GST Council was actually born. It is called as a brain of GST. Without GST Council, nothing can happen in GST. Nothing can happen in your GST without your GST Council. And finally, there were acts. When I am talking about acts, again the role of both your Parliament and legislature of states will come. So the moment we talk about your act, it is both Parliament and legislature of states. What are the acts which are passed by Parliament? What are the acts which are passed by Parliament? CGST Act, IGST Act, UTGST Act, because they don't have any legislature. Then GST Compensation to States Act. CGST Act 2017, IGST Act 2017, UTGST Act 2017, GST Compensation to States Act 2017. And what was done by legislature of states? Respective SGST Act. Respective, Delhi would have passed Delhi SGST Act. Tamil Nadu SGST Act. Maharashtra, and so on. And so on. Are you guys clear with this understanding? So this was the entire scenario when your GST was there. Please understand that the acts were ready in April 2017. All these acts, not main acts, all these central acts were ready right in April 2017. In March 2017, end of March 2017, 29th of March 2017, the bill were placed and they became act on April 2017. 12th April 2017, the acts were ready. Then it was the state's turn to pass the act. Central acts were ready on April 2017. Then the states passed their state. What was the first state to pass the SGST Act? It was Telangana. The first state to pass SGST Act was Telangana, and the last state, Jammu and Kashmir. In effect, your GST started functioning with effect from 1st July 2017. But for your Jammu and Kashmir, it was 8th of July 2017. It had a choice. Initially, it did not. Finally, it became part of GST. 8th July 2000. For the rest of India, it was 1st July 2017 for Jammu and Kashmir, which was state then. Now it is 2 union territories. At that point of time, it was state. It was 8th of July 2017. And these are the important events that happened when you are talking about your GST. When these central acts were passed, you need to understand that even rules were ready before GST started. Rules were ready in May 2017. Act was ready in April 2017, Central Act. Rules were ready in May 2017. And simultaneously, at the same point of time, states are passing their respective SGST. And the first of the state was Telangana and the last of the state was Jammu and Kashmir. So everything was ready before July 2017. What was the date when GST was effective? 1st July 2017. But for Jammu and Kashmir, 8th of July 2017. So this is the entire set of events. Remember that first is you are amending the constitution, then it is passing the acts. In between, the connecting point was GST Council. And when you look at the definition of GST within your constitution, which is Article 366 12A, it tells that GST is a tax on supply of goods or services or both. But it removes one thing from its ambit, except tax on supply of alcoholic liquor for human consumption. It is kept outside the ambit of GST. It is outside the ambit of GST. We'll be discussing that what tax will be there on alcoholic liquor, but it is as of now understand that it is kept outside the ambit of GST. What is permanently kept outside GST? Alcoholic liquor for human consumption. Alcoholic liquor for permanently. That is something called as temporary removal from GST. That will be the petroleum products. But permanent removal is alcoholic liquor for human consumption. Now, when we are talking about the basics, we have seen what is your DT and IDT, features of indirect taxes, and how your GST was born. Now, the next question, which is an obvious question, why was GST born? We have to address the question, why was GST born? What is the concept of GST and what are the advantages of GST? First, to understand why. Then, after we understand why, the next two things are very obvious. What are the concept of GST, how it works, features of GST, and what are the advantages of GST. Rather, the moment we cover why it was born, these two are automatically discussed. Now, please understand that the major issue when you talk about your earlier indirect taxes was what? You were not getting full credit. You are not getting full credit. The moment you are not getting your full credit, there will be cascading. Just to give you an outline, there were different taxes. Like you had excise duty on what? Manufacture of goods, which was under the control of whom? Central government. It was covered under entry 84, list 1, schedule 7. When it is in list 1, it is your union list. It is your union list. Yes, there was state excise duty as well, but on a small list of goods. Major list of goods was under union list. Then you had another major indirect tax, service tax. Again, service tax is on what? Provision of services. Under whose control? Central government. It was also there in list 1 of schedule 7 and entries, entry 97, residuary entry. Not a specific entry, a residuary entry. Then you had what? Customs, which is still alive. Which is still alive. Again, with the control of central government. It is on what? Customs duty is on what? Import and export of goods. So the moment I tell it is under the control of central government, list 1, schedule 7, entry 83. Entry 83. Then these are all basically the main central indirect taxes. You're talking about your state indirect taxes now. You had VAT CST. VAT and CST, which is on sale of goods. Local sales, VAT. Interstate sales, CST. Under the control of what? State government. So basically it will be under list 2, schedule 7, entry 54. Please understand that VAT is under list 2. CST is under list 1, but CST is levied by center, collected by, finally the revenue will go to state government. So we are only focusing on the state aspect. Revenue will finally go to state. CST was brought only to settle down the fights between the states. Central government will never have any control over VAT as well as CST. Revenue will finally go to state. VAT levied by state, collected by state. CST levied by center but collected by state. Then you had other small indirect taxes, like for example, you had your entry tax, which was on entry of goods, reverse of sales, purchase on entry of goods. Again, the control is of state government, and again, it is in list 2, schedule 7, entry 52. Then you had something called as your entertainment tax, which is on entertainment. But this time it is special. It was levied and collected by either state government or local authority. They would split the powers between both state government and local authority. But with the moment you talk about state or local authority, the list is list 2, schedule 7, entry 62. These were the major indirect taxes, not all indirect taxes, major indirect taxes before you had GST. If you look at the first three are the examples where the control is of central government. The last 3 are the example where the control is of. Please understand, we are not going in depth and seeing what credit is taken by whom, because that is not relevant. You understand the fact that in your industry, there are only 3 types of persons. Who are they? Manufacturer, your service provider, and trader. The difficulty was manufacturer was getting few credits and not few major credits. Manufacturer was getting few credits, he was not getting. Service provider was getting some credit and some credit he was not getting. Trader was not at all getting any credit except what? Except we are not there to discuss in depth that which credit is that. It's not relevant. Understand that manufacturer got major portion of ITC credit. Service provider got good portion of credit, but not major portion. Good portion of your credit. Credit is on your purchases, expenses, or fixed assets. Trader got very less, minor portion of your credit, input tax credit. Earlier, it was either SENVAT credit, CCR, state, or state input tax credit. SENVAT credit or state input tax credit. The moment I am talking about credit, it is on your purchases. We are only focusing on your purchases. The moment you get the credit, your cost, purchase cost decreases. The moment you get your input tax credit, if you get your credit, it is not added to the cost. If you don't get your credit, be it SENVAT credit or be it state input tax credit, it is added to your cost. If it is added to your cost, your selling price increases. Obviously, there's tax on tax, cascading effect. Even when you are giving the goods to the next person, he is getting for a higher price. So when you don't get your credit, there'll be cascading effect. Because if you don't get your credit, it will be added to the cost. Just for a small example, say 100 plus 5. This is the breakup of price plus tax. If you get your credit, your cost is only 100. 5 rupees is not added to the cost. If you don't get your credit, your cost is 105. And if your cost is increasing, that will be cascading effect, because if your cost increases, your selling price will obviously increase, and the next person will also be bearing that effect, right? So it is called as tax on tax, cascading effect. But if you get your credit, there won't be any cascading effect. This is a net difficulty or net major problem in your old indirect taxes. Let us not go into depth and see what manufacturer was getting, what service provider was getting, and what trader was getting, which credit they were getting and which credit they were not getting. Just understand that manufacturer was comfortably happy. He was getting major portion of credit. Service provider was getting good amount of credit, but not the major portion. Trader was getting minimum credit. Only VAT credit he was getting. Understand, in all the 3, they were not getting some credit or major credit. Every person was having some problem. Manufacturer, lesser problem. Trader, major problem. So the problem was credit. Credit is always on what? On your purchases, expenses, or capital goods. And we have seen the impact. If at all you don't get your credit, your cost increases, there will be cascading effect. Now what happened after GST? All 3 of them, be it manufacturer, be it service provider, be it trader, they get all the credit. Now there are only two types of purchases. One is intra-state purchase, where there will be CGST plus SGST. One is interstate purchase, where there will be IGST. Obviously, at times it will be along with compensation cess. So when you talk about your intra-state purchases and interstate purchases, you be a manufacturer of goods or your service provider or your trader, don't worry. You need not worry about any of these aspects. Why? Why? You will be getting all the credits. You will be getting all the credits. So there's no need to worry. There's no need to worry about credit. When I tell all the credits, understand that there's something called a section 17(5) of your CGST Act, where there is a block credit. Correct? So it is not that cascading effect is fully removed. But yes, majorly it is removed. And the good thing is there's no partiality between manufacturer, service provider and trader. Majorly they'll get all the credits. If it is not allowed, it is not allowed for anyone. If it is block credit, it's not allowed for anyone. So this was the major turning point. Rather, you can tell that the main reason was GST was brought was your cascading effect, to remove the cascading effect. So what was the main problem in your old indirect taxes? What was the major issue in your old indirect taxes? Major issue in your old indirect taxes. Cascading effect of taxes. Cascading. Now, what is the advantage of GST? No cascading. Now we are seeing simultaneously even the advantages. Earlier, there was cascading. After GST, there is no cascading. Earlier, you had double taxation. On certain sectors, software, restaurant and construction, you had double taxation, both VAT as well as CST. At that time, both VAT as well as service tax. VAT on goods portion, service tax on service portion. And there were multiple taxes also. Like we have discussed, there are various number of taxes. Double taxation is on the same item, two taxes. Multiple taxation means you had different names of taxes. You had entry tax, you had entertainment tax, you had octroi duty, you had even stamp duty, which still continues. You had customs duty, you had excise, you had VAT, you had CST, etc., etc. It goes on, the list goes on. Now it is only GST. Now these two issues are no more there. Why? There is elimination of multiple taxes as well as there is elimination of double taxation. These are the problems in your old indirect taxes, but in your GST, there is no double taxation and most of the multiple taxes are formed into one GST. Yes, there are still other taxes, but major indirect taxes are now clubbed into GST. Now, earlier, if you are purchasing from other state, there was CST. If you are purchasing from other state, there was, you will not get the credit. You will not get the, whether you are manufacturer, service provider or trader, you will not get the credit. CST credit is not got by anyone. You don't get the credit of CST, Central Sales Tax. Be a manufacturer, be a service provider, be a trader. Right. Now, supposing I am in Tamil Nadu, I purchase from Maharashtra. It will be CST. I will not get the credit. Same situation after GST. I am in Tamil Nadu, I am purchasing from Maharashtra. What will be the tax? What will be the tax? Will I get the credit? Yes, I will get the credit. Now, there is one nation. There is one nation, one market. One nation, one market. I purchase from Tamil Nadu, within Tamil Nadu, or from outside Tamil Nadu. If it is within Tamil Nadu, CGST, SGST, I'll get the credit. If it is from outside Tamil Nadu, IGST, I'll get the credit. So I don't have that difficulty. I don't have that. These are all the issues, and this is the solution. Obviously, there were other issues. Overlapping in valuation. Not only double taxation, overlapping in valuation. Valuation. When we talk about VAT, VAT was on selling price plus excise duty. I'm not talking about double taxation. It was overlapping of valuation. So where a manufacturer will pay two taxes, excise duty plus VAT. That is no problem. It's not double taxation. That's no problem because he is doing two events, manufacturing and selling. But when he is paying VAT, he was paying on price plus excise duty. Don't worry, it still continues in GST. So on certain items, to be very specific, when you're talking about your GST, tobacco, you'll have excise duty plus GST. GST is also on price plus. So you don't find any advantages given here. This problem still is there in your GST, and local taxes are not included in your credit chain. Your local taxes which are there, you don't get any credit. So if it was entertainment tax, luxury tax, you don't get the credit. But this problem is addressed. How this problem is addressed? Because now there is no cascading effect. You will get all the credit. There are no local taxes. When there are no such local taxes, this issue by default is addressed. Earlier, local taxes like your betting, gambling, lottery tax or luxury tax or entertainment tax, if you have expenses on these ambit, supposing you're talking about a company which is having all these taxes, when you book a hotel room, that's luxury tax, which is for business purposes, but you don't get the credit. But now in GST, if you book a hotel room, that'll be GST. No need to worry, you'll get the credit. You'll get the credit. So this issue is also addressed. So these were the issues in your old indirect taxes. There was cascading effect in GST, no cascading effect. Double taxation, multiple taxation in GST, no double taxation, no multiple taxation. Then it was one state, one market. One state in GST, one nation, one market. One nation. So you're talking about the issues in old indirect taxes vis-a-vis advantages of GST. Now, as we have started with advantages and we have seen the first three advantages, what are the other incidental advantages? It will also boost your Make in India initiative. Why? Foreign companies will now be readily investing in India because they are very well aware of the concept of GST. Reason being, more than 80-85% of the countries in the world already have adopted. So they are already aware. So they are happy with GST because they don't have any fear of taxation in India. So they'll be investing in India, rather booming, making your Making India initiative more prosperous, which has happened. In fact, initially it was not so clear. After a lot of years, now you see this Make in India initiative working out in reality to the extent that even our defense, we were dependent on outside India. Now we are self-dependent. We are not anymore dependent on other countries. We are independent, right? So that is the impact of your Make in India initiative. Even we take any sector, you'll get lots of examples, be it automobile sector or your mobile phone. You'll find a lot of examples where after this Make in India initiative has started, simultaneously clubbing with your GST, the result is that. And finally, government was very clear. This result is also now very clear. Initially, government was not sure whether we'll have high revenue or not. State government was much afraid whether we'll have high revenue or not. Every month, read the newspaper, right? Maybe around 7th to 15th, you'll get a newspaper article that comparatively the GST revenue vis-a-vis the earlier month. This is the increase even after COVID. Yes, there was an impact of COVID for 1.5 years, but thereafter you have seen the effect, increase in government. These are all incidental advantages. These are all direct advantage. The first three advantages that we have seen, they were all direct advantages. You could see them at the time when GST was brought. You can actually see them. But these advantages, it took time. Now you're seeing the results. It took time. Initially, if at all I was talking this in 2017, 2018, 2019, it was difficult to understand. But now, in 2023, it's very easy to understand that yes, this is the clear-cut advantages, incidental advantages, not direct advantages. These are all incidental advantages, right? So we have seen the issues in old indirect taxes vis-a-vis advantages in GST. Now let us even focus on your concept of GST. Obviously, this is also completed when we have covered all these points. GST, like other indirect taxes, is also a value added tax. It is only on validation. We have the concept of input tax credit, then output tax. So obviously it is value added tax. There is a continuous chain of credit. Manufacturer will pay output tax, wholesale will get the input tax credit. Wholesale will pay output tax, retailer 1 will get the input tax credit. Retailer 1 will pay output tax, retailer 2 will get the input tax credit. Retailer 2 will pay output tax, but the end consumer will not get the credit. The final burden is borne by the end consumer. Is there cascading or no cascading? There is no cascading. You get all the credit. So there's no cascading. And moreover, we have to understand that in GST, we have differentiation between goods and services, but obvious. Goods is different, services is different. But for both the definition of goods and services, you have to refer the same act. Unlike the earlier indirect taxation where you have to refer for the meaning of goods, separate act, meaning of services, separate act. You are going to refer the same act, CGST Act 2017. Right. These are the concepts of your GST. How it works. Features of GST. So once you understand the problem in old indirect taxes and advantages of GST, you know how it works. Features of your GST. It is a value added tax, that's full credit, therefore there's no cascading, but the end consumer will not get the credit. And in GST, goods and services are different, but you can refer the same CGST Act to understand what is goods and what is service. Right. So this is all about your issues in old indirect taxes, advantages of GST, and also the concept of GST. Now, let us go to the constitutional provisions and just understand on the outer side what are the constitutional provisions with respect to your GST. Now, when you talk about your constitutional provisions, because we need to understand when GST was born, the first of the step was amendment of constitution. What was the first step? Amendment of constitution. So what was first here to understand a bit of constitution? There's an article 265 which tells that if at all you want to bring any tax in India, there should be a law. Article 265. If you want to levy and collect any tax, please have a law. Then Article 245 tells that, okay, for a tax there should be law. Who will bring the law? Either Parliament or State Legislative Assembly. If it is for whole of India or part of India, Parliament. If it is for the whole of the state or part of the state, it is State Legislative Assembly. For a tax to be there in India, that should be law. Article 265. Who is going to bring the law? Parliament or State Legislative Assembly. Article 245. Which law by Parliament? Which law by State Legislative Assembly? This was decided by Article 246 read along with Schedule 7. You are under the control of Parliament, Union List, List 1. You are under the control of State Legislative Assembly, List 2, State List. Few are under Parliament, few of them are controlled both by Parliament and State Legislative Assembly, List 3, concurrent list. There are tax laws in List 1 and List 2, but in List 3 there are no tax laws. There are no tax laws. These items automatically you will understand when we see the further discussion which are the tax laws which are still there in List 1 and List 2. Automatically you will understand. We are not going to focus now. Now, List 3 was an ideal place for GST to be there because both there is the control of Parliament and State Legislative Assembly. So, initially if you see the committee meetings report, you will find that they thought that they will bring GST in List 3, but finally it did not happen. Why? List 3 is having a problem. It is as of till GST was born, there was no tax laws in List 3. Even after GST was born, there is no tax law in GST. What is the major problem in List 3? Though it tells that both Parliament and State Legislative Assembly will decide together, but there is an article called as Article 254, which tells that Parliament will have supremacy. So if any conflict is there, who will have the final decision? So states will not agree. States will not. That being the case, how GST was born? GST was not kept inside Article 246 List 3. It was born by way of a new article called as Article 246A. 246A. So birth article of GST is Article 246A, by which you had your CGST Act, by which you had your SGST Act, by which you had your CGST Act, by which you had your obviously UTGST Act also was born because union territories don't have their own legislative assembly and Parliament did make them. Right, CGST Act by Parliament and UTGST Act by Parliament, SGST Act by State Legislative Assembly. Article 246A. But then there is a exception which tells that few matters, very few matters, rather to be very specific, 2 matters will be decided only and only by Parliament. Will be decided only and only by, and that gives birth to your IGST Act. The reason for the birth of IGST Act 269A. What are the two matters that will be decided only by your parliament? Whether it is an interstate supply or intrastate supply. Whether it is an interstate supply or intrastate supply. How to find interstate supply or intrastate supply? You have to find out place of supply. You have to find out place of supply. Only parliament will decide whether it is interstate supply or intrastate supply. Right. So when you're talking about your place of supply provisions, you're talking about your place of supply provisions. So be very specific. Section 10, Section 11, Section 12, Section 13 of your IGST Act. Obviously read along with Section 7, 8, 9 to help out, to find out inter or intra. Place of supply is by 10, 11, 12, 13. To find out interstate supply, intrastate supply, after finding out place of supply is 7, 8, 9. It is parliament. And these sections are of IGST Act. And there it is very clear that if it is import of goods and services, by default it will be interstate supply, IGST. So that's a clarification. Import and export is always interstate, IGST. So that is the first subject matter. Second subject matter. When you talk about your intrastate supply, CGST, SGST. CGST revenue by parliament and SGST by legislature of state. But what if it is IGST? IGST does not belong to center. It will collect and retain 50% it will have, balance 50% it will distribute to the consuming states. GST is a destination based consumption tax. Don't forget, GST is a destination based consumption tax. It will give to the destination state. Who will decide what was the destination state? It is not a single transactions. Crores and crores of transactions will happen in a single day. How to decide that? Parliament will have on the portal, they take the help of the portal, they get the statistics from the portal and thereafter they'll do the calculation and distribute. Now that is decided by whom? That is decided by whom? Parliament. So if at all you're talking about your GST on interstate supply, it will be levied and collected by center. It will have it, but finally apportioned between union and states. Finally it will be distributed between union and states. Union and states. Are you guys clear with this understanding? So this is also discussed in your IGST Act. Are you guys clear? So basically what is the birth article? 246A. Be it your CGST Act, UTGST Act by Parliament, SGST Act by respective state. But few matters are to be decided only and only by Parliament. They are to be decided only and only by Parliament. That is IGST Act. What are the two matters? IGST Act will talk only about these two issues. Place of supply to decide intrastate supply, interstate supply. And if it is IGST, how to apportion IGST revenue between union and the states. Only these two matters. You will not find anything extra in your IGST Act. Are you guys clear with this understanding? 246A, 269A. Then, what is the brain of GST? Or the godfather of GST? Godfather of GST happens to be your GST Council, the provisions of which are discussed in Article 279A. Article 279A. And when you talk about the members of GST Council, there will be two members of the center, that is Union Finance Minister, who has visited our city recently, and Union Minister of State in charge of Revenue or Finance. Right, two members of center. And 31 states. How many states are there? Totally 28 plus 3 union territories. DPJ, APJ Abdul Kalam, replace it by DPJ, Delhi, Puducherry and Jammu Union Territory, not Ladakh, Jammu Union Territory. They will be treated as states. They will be treated as states for the purpose of GST. For the purpose of GST. So in total there are 31 states. Now there will be 31 representative of the states. Basically, the state finance minister or the nominees will be coming there in the meeting. Who will be the chairperson? Union finance minister. Vice chairperson, they will choose among themselves. Chairperson is always Union finance minister. VC will be selected by the members. Now, what is the purpose of GST Council? Rather, you can understand that what are the taxes which will come inside GST is decided by GST Council. Rates, exemption, threshold for registration composition is decided by GST Council. The model GST law, apportionment of IGST among the union and the states, place of supply is decided by GST Council. Petroleum products which are kept outside now, when they have to be brought inside GST by GST Council. Special rates for special period, like for example, Kerala cess at the time of calamity, decided by GST Council. Special provisions for special category states, will be seeing them in your registration, right? You have Tripura, Manipur, Mizoram and Nagaland. They have special limits decided by GST Council. If at all two states are fighting, who will be resolving the dispute? GST Council. Not only two states, center and state fighting for the revenue, which will happen very soon, which you have not seen till now, but which will happen very soon. That also will be first decided by GST Council. But I am very sure that GST Council will not find a solution. That will go to court. That will go to the court. Finally, any other matter. Don't spend your time. Anything, everything in GST is decided by GST Council. Anything, everything in GST is decided by anything that is to happen in GST. When there is an amendment in GST, make very clear that there was a GST Council meeting after which they proposed something and it was finalized. There will be something on agenda, say 10 items on the agenda, 8 items being finalized. Out of 8 items, you will get amendments in 7 items. It is not necessary that all the 8 items which are finalized by GST Council, you see the amendments. So if you see the history of GST Council meeting, 10 items on agenda, 8 items being passed. Don't have a misconception that all 8 items will convert into amendments. We have seen cases where out of 8 items which have been passed by GST Council, only 7 have converted to the provisions of the Act or the rules. Few of them, though they have been finalized by GST Council, they are yet to see the light of the day. Right, that will happen. But one thing is very clear. Anything and everything in GST will come through GST Council. Now, when GST Council is deciding, 2 important things you should see. First, see the quorum. See the quorum. And once quorum is there, see the pass percentage. See the pass percentage. This is to be done for each of the item in the agenda. 10 items on the agenda, quorum will be decided only once, not for each of the item. But for pass percentage, it will be seen for each of the item. What is the quorum? How many members are there in totally? 2 plus 31, 33. 2 plus. So, first thing, when the meeting is starting, what is to be checked? What is to be checked? 50%. Check it only once. See whether 17 members are present. See whether 17 members are present. If 17 members are present, only then meeting can start. Only then, if 17 members are not present, forget about the second step. And this first step will be seen only once when the meeting is started. Second step will be seen for each of the item. Will be seen for each of the item on the agenda. What is the pass percentage? What is the pass percentage? 75% is the pass percentage. 75% is the pass percentage. But that 75% is the weighted average pass percentage. And that is only of members present and voting, not of the total members. Members present and voting. 75% first special point. It is not simple average, it is weighted average. Second special point. Don't calculate all the members. It is present and voting. Present and voting. Put in a simple way. What will be the formula? What is the weightage? The weightage of the center is given as 1/3 and weightage of state is all the states put together is given as. So what will be the formula? So we'll just see the formula so that you understand how to calculate the pass percentage. So 1/3 weight is given to the center. See how many of them are in favor. How many of them are in favor and see how many of them are present and voting. This will be for center. This will be for your center, which means you're basically talking about your 3 members. 1/3 multiplied by who are in favor. This will be decided for each of the matter. Who are in favor divided by how many members of center are present and voting. Don't even include state. Then 2/3 of how many members of states are in favor. Now don't see center, only focus on the states, divided by total members of the state present and voting. You'll get a percentage. If it is 75% or more, superb. That item on the agenda is passed. If it is less than 75%, that particular item on the agenda is not passed. This is not in totality for the entire meeting. This is for each of the quorum is checked only once. But this pass percentage is checked for each of the item on the agenda. Are you clear with this understanding? This is how you have to calculate your weighted average. For center, 1 divided by 3 multiplied by center members in favor of that item which is being discussed divided by total members of the center present and voting. I am not writing divided by 3. Out of say 3 members, when you're talking about total members of the center, how many members are there totally? 2. Out of 2 members, might be only 1 is present. Generally, it doesn't happen, but might be only 1 is present. So this favor divided by number of members of the center present and voting. Understand this with states. States is 2/3 multiplied by members of the states in favor divided by states present and voting. Totally out of 31 states, present and voting might be only 20. In favor might be only 15. So 15 divided by 20. 15 divided by 20. Right, this is how you have to see the pass percentage. GST Council. And the main thing that is required and which can be tested in your MCQ is this GST Council pass percentage. See, MCQ, you cannot finally see on the question paper what MCQs were asked. But finally, when you understand the way ICA have started asking MCQ for the last 3 years, they are asking very typical MCQs so that you have to know the provisions fully. MCQs are more challenging than the other questions. So they'll be asking these questions, and when you see the case studies, you'll understand that they have started linking the chapters from 4 to 5 chapters which you have been doing in the class. Right, initial period of your GSC, linking of chapters was not so much. When you see your MCQ, the first case study questions, you understand why it was very important to connect the different chapters, why it was very important for us to switch over the chapters. In class, many of you would have felt that this chapter linking with this chapter, again going back to this chapter, again going, it is required. Taxation is a subject which has to be interlinked. GST Council, this happens to be a very important point. And finally, when you're talking about the last part of this subject, this particular chapter, again an important thing. So when you're talking about from your exam point of view, maybe GST Council, the calculation might be very important, and this last area is very, 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 very important. When you're talking about your GST, what are the taxes that have been subsumed inside your GST? Which means that have been merged inside GST, they are no more that they are dead. So let us understand what are the central taxes which are subsumed inside your GST, state taxes which are subsumed inside your GST. Very quickly, I want from you, what are the central taxes that are subsumed inside GST? First one, excise duty. Excise duty, be it central excise duty or be it additional excise duty or be it excise duty on medicinal and toilet preparation. Excise duty. Second, your service tax. Third, you're talking about your CST. CST is levied by center but collected by, therefore you find in the central list, CST. Right. Customs duty, whether it is subsumed inside GST. Whether customs duty is alive or dead. Customs duty is still alive. Customs duty was earlier basic customs duty. Then you had CVD, which was nothing but duplicate of excise duty. Then you had education cess and secondary education cess. Finally, you had special CVD, which is countervailing or counterbalancing of VAT. After GST, customs duty is still alive. Right. And your education cess, secondary education cess has become social welfare surcharge. That is not because of GST. Over a period of time, the new government will always try to bring something new. So they brought out social welfare surcharge. And finally, when you're talking about your CVD and special CVD, they have merged into your IGST. They have merged into your, so CVD and special CVD is no more there. It is merged into your IGST. Very simple reason. When excise is dead, duplicate of excise cannot be there. When VAT is dead, duplicate of VAT cannot be there. They are replaced by IGST. So customs duty today is BCD plus SWS plus IGST. So what portion of customs is gone? Customs is not gone, but what portion of customs is gone? Which portion of customs is gone? CVD and special CVD of custom portion is gone. It is merged into IGST. Customs duty is alive, but the breakup of customs duty is BCD plus SWS plus IGST. CVD and special CVD, that is countervailing of excise and countervailing of VAT, is no more that. These are the central taxes which are gone, dead. What are the state taxes which are gone? You have your VAT and sales tax being gone. Opposite of that is entry tax, that is also gone. Then you have your taxes on your advertisements, betting, gambling, lottery tax, that is gone. That is gone. Then you have your luxury tax, which is gone. But when you talk about your entertainment tax by state government is gone. Whereas your entertainment tax, which is by your local authority, is still alive. Entertainment tax by state government, gone. By local authority, alive. So what are the state taxes which are gone? VAT, entry tax. Advertisement, betting, gambling, lottery tax. Luxury tax, gone. Entertainment tax by state government is gone. But entertainment tax by local authority or local body is still alive. Still, why I am not touching the last point here is it is talking about cess and surcharges. If at all the main taxes are gone, obviously the cess and the surcharge on them is automatically gone. These are all the taxes that have subsumed inside GST. These are the only taxes. Are there other indirect taxes which are still alive? Yes. Please come over the myth that all the indirect taxes have gone. There are other indirect taxes which are still alive. A few examples of that. When you talk about your central taxes, your air travel tax, still alive. Your air travel tax is still alive. Pollution tax, still. Clean energy tax, we call it as clean energy tax, still alive. State taxes, your road tax, still alive. Motor vehicle tax, still alive. Stamp duty, still alive. So don't have a myth that all the indirect taxes are gone. These are the specific list of indirect taxes that have gone. If you don't find that item in this list, it means it is still alive. Once you know these items, the special goods which are very important, which are having different tax. Special goods. Now I said that excise duty is gone, VAT CST is gone. It is gone, but it is there on certain items even now. What are the special items that are there? Your alcoholic liquor for human consumption, your 5 notified petroleum products which are petroleum, crude, high-speed diesel oil, motor spirit which is commonly called as petrol, natural gas, and aviation turbine fuel which is called as white petrol. Not any petroleum products, 5 notified petroleum products. Then you have tobacco and tobacco products. Then you have your opium, Indian hemp, and narcotics. Opium, Indian hemp, and narcotics. These special items are having what? They are having different taxes. Alcoholic liquor for human consumption, not normal alcohol. Alcoholic liquor for human consumption. Outside GST or inside GST? Outside GST. Permanently outside GST. Permanently outside GST. What are the type of tax? State excise duty, state VAT. That is a negotiation between the center and the state. States were given this permanently. State excise duty plus state VAT. CST is also going to the state only. Levied by center but collected by state. State excise duty and state VAT. Both will go to state government. Both excise duty revenue will go to state government as well as VAT revenue will go to state government. What about tobacco? What about 5 notified petroleum products? Not any petroleum products, 5 notified petroleum products. They are temporarily outside GST. Time being they are outside GST. GST council will tell when they will come inside GST. What are the taxes on them? Central excise duty which will go to central government only. VAT CST which will go to state government only. Just see the difference. When you talk about alcoholic liquor for human consumption, permanently outside GST, constitution amendment is required to bring inside GST, and the taxes on them is state excise and state VAT. Both will go to state government. 5 notified petroleum products, timing they are outside GST. Who will tell when to come? When they will come inside GST? GST council. And what are the taxes? Central excise duty fully going to central government, and VAT, which will fully go to state government. Then you have tobacco. See, understand, tobacco attracts GST. Even your opium, Indian hemp, narcotics attracts GST. So these items, please make it very clear, they attract GST. They attract GST. They do attract GST. But the differences. What are the difference? When you talk about your tobacco, it will be central excise duty plus GST. Central excise duty fully will go to the central government. GST will be shared between center and the state. Plus GST. GST will be on price plus excise. Likewise, states said that, okay, if you are taking such item, let us have one item for ourselves. What is that? Opium, Indian hemp, and narcotics. What is the item? What is the tax? State excise duty plus GST. Plus state excise duty fully will go to the state government. GST will be shared between center and state. And when it's GST, it will be on price plus excise. Price plus excise. And compensation cess will be there on select items. Initially, for the initial few years, please understand that this is not 5 years, it has been extended, maybe 6.5 years or 7 years approximately. But the central government has said that we will give you the entire revenue of compensation cess. Entire revenue. Because we have a fear of loss of revenue. So what we'll do, whatever compensation cess we are collecting on certain items, not on all items, we will give it to you fully. Thereafter it will be fully belonging to the central government. But initially, for the initial 6.75 or 7 years, it will be fully given to the states, fully distributed to the states. Initially it was 5 years, then it was extended. Are you guys clear with this negotiation part? And the final part of this chapter is this was a very important discussion. What are the taxes which are inside GST, outside GST, and what are the special items which attracts different types of taxes? 4 special items attracting different types of taxes. And finally, when we talk about your GST, GST is a destination based consumption tax. Finally, revenue will go to the consuming state, not the manufacturing state. And how to understand when it is CGST, SGST, when it is IGST? If I tell the goods are coming from USA to say Maharashtra, Maharashtra to say Tamil Nadu, Tamil Nadu to say Lakshadweep, Lakshadweep back to USA. If it is one country to another country, IGST. If it is goods, BCD, SWS plus IGST, customs duty. If it is service, IGST. If it is service, it is goods, it is customs duty. BCD, SWS, it is not GST. It is customs duty, BCD, SWS, IGST. If it is service, only IGST. Then if it is within the state, if it is moving from Maharashtra to Maharashtra, CGST plus Maharashtra SGST. From Maharashtra to Tamil Nadu, one state to another state, IGST. From Tamil Nadu to Tamil Nadu, CGST, SGST. From Tamil Nadu to Lakshadweep, IGST. Within Lakshadweep, CGST plus UTGST. Lakshadweep back to USA. Simple. If it is within the same state or within the same union territory, it is CGST plus SGST or CGST plus UTGST as the case may be. But if it is from one state, another state, one union territory, another union territory, state to union territory to state, one country, India, outside India, it is all IGST. Right? One exception. Even if it is within the same state or same union territory, even if it is the same state or same union territory, assume that it is within the same state. You are talking about sale from domestic tariff area to special economic zone, or from special economic zone to domestic tariff area, right? All are there in same state, Tamil Nadu. Though they are there in Tamil Nadu, what will happen? what will happen? This will always be treated as IGST transaction. When it is zero rating, when it is not, forget about, but it is treated as IGST. It is treated as IGST. Right. So that is an exception which is there when you talk about CGST, SGST or IGST. Understand that by default it is IGST. CGST, SGST, it should be within the same state or within the same unit entity, and that also it should not have, the transaction should not be having special economic zone. The transaction should not be involving special economic zone. So that is where you talk about your intra-state supply and interstate supply. And that being the case, our Indian GST model is called as dual model. Intra-state model, interstate model. Intra-state model, interstate model. Dual model of your GST. Right. So that completes our basic concept of introduction of your GST. The items which were not touched, automatically they are covered when we have discussed the different points automatically. So the uncovered portion, the moment you have discussed other areas, automatically they have been covered. Introduction to your GST. This is your levy of GST. For sure, you will be getting questions from this area which focuses on the term supply. Where the focus is on the term supply. And section 1 of CGST Act. Unless otherwise we are discussing, all the sections that we are discussing is from your CGST Act. This is fully from your CGST Act. Right. So section 1 tells that GST Act is applicable throughout India, including Jammu and Kashmir. So earlier it was state of Jammu and Kashmir. Now it is Union Territory. Jammu and Kashmir and Union Territory Ladakh. So it is applicable throughout India. Now talking about your charging section. Charging section is required for any tax law. So in GST, it is section 9 of CGST Act. Section 9 of CGST Act. And section 9 of CGST Act talks about 6 P's. Product being goods and services. Process being supply. And place. When you talk about place, if you see CGST Act, they will be talking about intrastate. Intra-state supply. Intrastate. Same is there in SGST Act, which is not there for your exams. In IGST Act, they will be focusing on interstate. So the charging section basically is section 9 of CGST Act, read along with section 5 of IGST Act. Section 9 of CGST Act, read along with section 5 of IGST Act. Section 5 of IGST Act. The difference I am highlighting. In CGST Act, that will be focusing on intra-state supply. IGST Act, it is interstate supply. So these are the 3 P's. Product, process, place. Product is goods, services. Process is supply. And place is intrastate or interstate. Intrastate or interstate. If at all the first 3 P's are satisfied, it means GST is there. And when GST is there, you require 2 things to calculate GST. One is price, one is percentage, one is value, one is rate. Correct? So we will call it as price and percentage. Price and, so price is valuation under section 15. And percentage, the maximum percentage that you can have in CGST Act is 20. Maximum in SGST Act is 20. Maximum percentage that you can have in IGST Act is maximum. What are the normal percentage that are there in GST law? 0, 5, 12, 18, 28, 28 percentage plus compensation cess, etc., etc., etc. Correct? There are special rates also apart from these rates. But what is the maximum percentage that CGST can have? 20. SGST? 20. IGST? Obviously, it will be 20 plus 20, it will be 40. It will be 40%. As per Act, they give an upper limit for CGST 20, SGST 20 and IGST 40. IGST 40. They can go up to that limit. As of now, normally they take 28%, which means 14 plus 14, CGST, SGST or IGST 28. But they can go up to 20 plus 20 or 40. CGST 20, SGST 20 IGST 40. Right, that is the percentage. Finally, when you know that GST is going to be that by product process place, by finding out product process place. When you know the GST calculation part, price and percentage. The last question that should come in your mind is who is going to pay? Taxable person. Who's going to pay? Taxable person is going to pay. Normally, who pays GST to the government? Supplier or recipient? That's the difference. Who bears the burden? Who bears the burden? Recipient. But who pays to the government? Who pays to the government? Who pays to the government? There's a difference. Who bears the burden? Recipient. But who pays to the government? So normally it is supplier. In certain cases, it is recipient, which we call it as reverse charge mechanism. Otherwise, it is forward charge mechanism. Who will pay? So who's liable to pay GST to the government? Louder. Who bears the burden? That's a difference. That's a difference. So normally it is supplier, which we call it as forward charge mechanism, but it can be recipient in very rare cases. That is called as reverse charge mechanism, and that area is discussed in a separate topic, which is discussed in section 9.3, first type of RCM, section 9.4, second type of RCM, 9.5, neither FCM nor RCM. Neither supplier will pay nor recipient will pay. It is the third party. Electronic commerce operator will pay. Third party. He is neither the supplier nor the recipient. For notified services supplied through ECO, it will be ECO who is going to pay. That is discussed in 9.5. 9.5. So that is a separate part. Now 9.2 we have already discussed earlier that there are certain items which are temporarily outside GST. There are certain items which are temporarily outside GST, correct? So certain items are there which are temporarily outside your GST. Temporarily they are outside your GST. They are not permanently outside GST. They are temporarily outside your GST. What are those items? What are those items? Petroleum, crude, ICE, oil, gas, natural gas, aviation, turbine. That is nothing but white petrol. That is nothing but white petrol. Now talking about other areas of your GST. Now 6 P's are there. Difference in CGST Act and IGST Act is clearly known that there are only two differences: interstate, intrastate. 20%, 40%. Rest all is the same. And IGST Act has got a special charging section which is not there in CGST Act. There's a proviso to section 5.1 which is not there in CGST Act. You don't find that in CGST Act. Everything else is the same. I'm highlighting the differences. One, intrastate changes to interstate. Second, 20% changes to. Third, there is a special point in IGST Act, proviso to section 5.1 which is not there in CGST Act. This is because it talks about import of goods. For import of goods, there's only and only customs duty. The breakup of which is basic customs duty plus social welfare surcharge plus IGST. So there will be IGST portion which requires a backup, which is given in proviso to section 5.1, which is given in proviso to section 5. So there's a backup which is given in proviso to section 5. There's a backup which is given there. So that backup only talks about import of goods, and import of goods will attract customs duty. The breakup of which is BCD plus social welfare surcharge plus, and as there is IGST, there should be a backup here. So that is discussed here. If you see this provision again, they'll tell that please go back to Customs Act, go back to Customs Act, go back to Customs Act. Every calculation is given in your Customs Act. So they give reference to Customs Act and Customs Tariff Act. Go back there and find it out, because it deals with import of goods. It deals with import of goods. And sir, why only IGST? Please make it simple. Same state to same state, it is CGST, SGST. One state to another state, it is. One country to another country, it is IGST. So when there is import of goods, yes, there is customs duty, the breakup of which is basic custom duty plus SWS plus IGST. That custom duty includes GST, and that GST will always be, because it is one country to another country. One country to another country. So why we are only focusing on import of goods, import of goods, import of goods? Why not import of services? Because import of services does not attract customs duty. It is only IGST. Import of services does not attract customs. Our law only covers goods. It does not cover services. So import of services, what will be there? Only IGST. Only IGST. By default, it will be only IGST. Now, when you talk about the charging section, you need to understand our focus on this entire chapter will be on the first three P's: product, process, and place. And importantly on process. Importantly on process. When you see the product, and place, first we'll try to complete product and place. Place, it is interstate or intrastate. For knowing whether it is interstate or intrastate, you should know whether it is within the same state or one state too. So for that, you should know India, and you should know what is a state and what is a union territory. India means what? India means the land mass that you think of, land area. The land area that you think of, geographical boundary given in Article 1 of Constitution, the geographical boundary. Sea area. Sea area is up to 200 nautical miles. 200? 0 to 200 nautical miles, called as exclusive economic zone. Called as exclusive. So 0 to 12 nautical miles is territorial waters of India. It was, it is, it will always be part of India. But 0 to 200 nautical miles is only for the purpose of tax collection, economic purposes. There's a difference. The boundary of India always includes 12 nautical miles, territorial waters. But for the purpose of tax collection of GST, it is 0 to 200 nautical miles. 0 to sea area and air area. Above the territory, that is land, and above territorial waters, that is 12 nautical miles. Above the territory and above territorial waters, that is 12 nautical miles. That air area is relevant for satellites. It's not relevant for transportation of passengers or goods in air. It's relevant for launching of satellites from which part it was launched. So above the land and above territorial waters of India. That is the meaning of India. And all the definitions that we are seeing is from section 2 of CGST Act. Section 2 of CGST Act. Now when you talk about the state and union territory, we have already discussed. State, normally how many states are there? 28. But for the purpose of GST law, there are 31 states. Correct? It includes Delhi, Puducherry or Pondicherry and Jammu and Kashmir. Right? Union territory. Totally how many union territories are there? Totally how many union territories are there? Totally 8. But for the purpose of GST, it is only balance 5. So remove Delhi, Puducherry and Jammu and Kashmir. What are the balance 5? Andaman and Nicobar, Lakshadweep, Dadar and Nagar Haveli, Daman and Diu. Previously they were different. Now they are merged. Ladakh and Chandigarh. Ladakh and these are the 5 union territories are there. Last point is nothing but if at all Indian government occupies some new territory, till it is designated as a state, it will be called as union territory. It will be called as union territory. Right. Now, please understand why this difference of state and union territory. Each of these 31 states have their respective SGST Act. But these 5 union territories will not have SGST Act. They will have a common UT-GST Act. Common passed by the parliament. But when you talk about supply part, there's no difference. If there's a supply from Tamil Nadu to Tamil Nadu, what will be the tax? Louder. What will be the tax? CGST, SGST. CGST, SGST. But if it is From Tamil Nadu to Andhra Pradesh. Please, 5 minutes varingla. 5 minutes varingla inga. If it is from Tamil Nadu to Andhra, it is IGST. From Lakshadweep to Lakshadweep, very clearly tell me. CGST plus UTGST. From Andaman Nicobar to Andaman Nicobar, CGST plus UTGST. Right. From Delhi to Delhi, CGST plus Delhi SGST, Delhi state, Delhi SGST. From Jammu to Jammu, CGST plus Jammu SGST. From Ladakh to Ladakh, CGST plus from Ladakh to Uttar Pradesh, Uttar Pradesh to Uttar Pradesh, Uttar Pradesh to Uttar Pradesh plus UP SGST, Uttar Pradesh SGST. From Uttar Pradesh to Bihar, Bihar to Bihar, CGST plus Bihar SGST. From Bihar to say Odisha, Odisha to Odisha. From Odisha to Lakshadweep, IGST. Lakshadweep to Lakshadweep, CGST plus. When you're calling it as UTGST, it is UTGST. It is not Lakshadweep UT, it's UTGST. It is UTGST. Right, Lakshadweep to Andaman, Lakshadweep to Andaman, IGST. See, one state to same state, CGST plus SGST. One state to different state, IGST. One state to union territory to different union territory to same union territory, India to outside India, India to outside India. It may be export or it may not be export. That is a different thing. About GST, India to outside India, outside India to India. One country to another country is always. I'm not talking about goods or services. I'm just telling it is interstate supply. It is interstate. So that is all about your place. That's everything about your place. Right. So product, process, place. Place is over. Place is over. What is the product? What is the product? What is the product? Product. What is goods and what is service? Goods means any movable property. Service means anything other than goods. So goods is movable property. Service is anything other than goods. But both goods and service will not include something. Money and securities is neither goods nor services. Clear? Now goods include something. Two items. Goods includes actionable claim. Goods includes actionable claim. Goods also includes growing crops or grass or things which is attached to or forming part of the land which are agreed to be severed under the contract of supply or before supply, which means which are cut down and sold. Which are not sold along with the land. Which are cut down and sold. They are movable. They are movable. Right. So if you were to summarize goods, goods is equal to movable minus money securities plus actionable claim plus growing crops and grass which are cut down and sold. Which are cut down and sold. Now what are services? Anything other than goods minus money and securities plus service charges related to money and service charges related to securities. Simple. Money and securities is neither goods nor services. But service charges related to money is service. If you're getting a loan, it is mere transaction money, neither goods nor services. But when you're getting a loan, there's a processing fees. Documentation fees. That is service charges related to transaction money. It is service. If you're purchasing shares or mutual funds, that is mere transaction in securities, neither goods nor services, no GST. But when you're purchasing the shares or mutual fund units, there will be some charges involved. Say, for example, when you're purchasing mutual funds, there may be entry load. There may be entry load, nothing but service charges. Nothing but that attracts GST. It is service. It is service. See what they're telling. Only money transaction, only security transaction, it is neither goods nor services, no GST. But there will be service charges related to transaction in money. Service charges related to transaction in securities. That is nothing but service. It attracts GST. It attracts GST. I'll repeat other examples. Supposing you are making payment to your supplier. That is mere transaction in money. Just because you are making payment, no GST. But that is when you are making the payment to your customer, you are making by way of say NEFT or RTGS. NEFT or there will be NEFT charges, RTGS charges. Camera. Okay. There will be NEFT charges, RTGS charges. That NEFT charges, RTGS charges is supply of service. It attracts GST. Likewise, supposing you are investing in shares of Reliance Limited, whether that attracts GST? You're purchasing shares of Reliance Limited, whether it attracts GST? No. Mere transaction in securities. You are paying service charges to a broker who gave you the tip for buying shares. Whether that will attract GST? Whether that will attract GST? Yes. So you are getting that point? It is disconnecting again and again. Lunchtime or what? Lunchtime will charge. So when you talk about this particular transaction, you need to understand that service charges நிறைய இடத்துல இருக்கும். ஒரு இன்னொரு எக்ஸாம்பிள் சொல்றேன். ஃபாரின் கரன்சி வாங்குறீங்க. You are going to a bank or authorized dealer and you're getting a foreign currency. You're getting a foreign currency. When you're getting a foreign currency, what is happening is you're going and giving, say, supposing $1 is 80 rupees, but you're going and paying 82 rupees. You're going and paying 82 rupees. Whether 80 rupees will attract GST. Whether that 80 rupees will attract GST. Why? Even foreign currency is money. Even if it is foreign currency, that is nothing but money. Okay, give it this way. I give you 2000 rupees. You give me 500 rupees. I give you a single 500 rupees. You give me 500 rupees. Now, what will happen when you talk about this 500 rupees? What is going to happen about that? GST application on it? No. Why? Mere transaction in money. It is mere transaction in money. Mere transaction in money means it's just changing hands. That money includes foreign currency. Your money includes no GST implication. Because I give you one single 500 rupees or you give me 500 rupees. So there's no implication of GST. But. If I go to a bank or office, I say $1. But I go and 82 rupees because there will be a difference of rate. Right? Right? Now that 80 rupees, $1, you split the 80 rupees into what? 80 and 2. That 80 rupees is a transaction. Money, no GST, but 2 rupees. 2 rupees. Service charge. Technically called as charge or credit. Technically called as What is the name technically? There's a service charge. There's a service charge. Is it attracting GST? Yes. There is service. That is yes. So what you need to understand is money and securities is neither goods nor services. But the transactions surrounding money and security, the charges surrounding money and securities, that will be subject to GST. That will be clearly subject to GST. So that is all about goods and services. And when you see the definition of money, it's very normal term. Any kind of negotiable instrument. They even focus on the term that money includes foreign currency and money includes any such currency or instrument recognized by RBI. So even when you're paying the payment by Paytm, GPay and all, it's all recognized by RBI. But money will not include any currency that is held for the purpose of its numismatic value, coin collection. You're having an old coin, old note. That is not money. That itself will have a value. That is actually per se goods. Right? Supposing I have a very old coin. Will I trade it like goods? Yes. I'll trade it like goods. That per se will have a market value. That old coin will have thousands of rupees value or lakh of rupees value, or at times even crores of rupees value in current context. Correct? So that old coin collection is not money, it is goods. It's not money, it is goods. Likewise, securities includes all the type of securities which is given in your Securities Contract Regulation Act. Be it shares or scrips or bonds, debentures, mutual fund units, government securities, derivatives, security receipts, instrument certificates given by special purpose entity, right shares, or any instrument declared as security by the government. All the types of securities. They're just trying to tell that it includes all the types of securities. Every type of security is a security. The definition itself is copied from your Securities Contract Regulation Act. Alright. What is actionable claim then? Why are we seeing that the meaning of securities, money and securities? Because money and securities is neither goods nor. Why are we seeing the meaning of actionable claim? Because it is goods. Because it is goods. Actionable claim, in a very simple language, is a claim against which you can take an action in civil court. A claim against which you can take an action in, that will be discussed in two parts. A claim which is against a debt which is not secured, unsecured debts. It is not secured by mortgage of immovable property or hypothecation or pledge of movable property. In simple language, claim against unsecured debts. Classic examples. If at all you have a debtor who is not paying you, or you have an insurance claim where the insurance company is telling that we are not going to pay that claim. Something happened to your factory, there is a fire at your factory, you have taken insurance for that, but the insurance company is giving some reason not to pay it. What is the best thing that you will do? What is the last resort that you have? If your customer is not paying you the amount, if your debtor is not paying you the amount, what action you will take? Go to court. If the insurance company, in spite of taking insurance for the factory, is not paying for the fire which occurred at the factory, giving some XYZ reasons, what you will do? File a case against the insurance company in court. Again, read the term. Actionable claim. A claim against you can take an action in civil court. A claim against which you can take an action in civil court. First part, a claim against unsecured debt, or a claim to beneficial interest in movable property which is not in your possession. Now what is that? Second part of actionable claim. A claim against beneficial interest in movable property. The best example of this is betting, gambling, lottery. You're playing while IPL is going on, you're also playing on, say, MPL app or whatever app it is. Dream 11. Dream. Only in your dreams you'll win. Right. So you won that amount. For some reason, Dream 11 is not giving you the payment. For some reasons. Right. What is the last resort that you have? File a case against that company in civil court. You always believe you are very lucky. So every day morning before coming to classes, you purchase a lottery ticket. Obviously not in Tamil Nadu. If at all you are in border places of Kerala, Coimbatore 40-45 kilometers, it is a state subject. You can purchase lottery tickets from there. Right, you won the lottery ticket. And you are so happy. You are telling that I will not do anything more. I won lottery ticket of say 10 crores. But lottery company for some reason is telling that sorry. All your happiness is shattered down in a second. What is the last thing that you can do? File a case. So actionable claim is nothing but a claim against which you can take an action in civil court. So why two parts? The first part is there is an debt other than secured debt, which means the opposite party has done something which is liable to pay you. And the second part is not that. Beneficial interest in movable property. You have a piece of paper, ticket, or a receipt in your mobile phone, which is not in your possession. You have won that amount, but not in your possession, which the civil court will recognize as an affording grounds for relief, and it will tell that yes, you can file a case. You can file a case. Please understand that actionable claims are goods. Actionable claims are goods. If actionable claims are goods, transaction actionable claims will attract GST. But when you see Schedule 3, Schedule 3 tells that actionable claims other than specified actionable claims like betting, gambling, lottery, online, money, gaming, horse racing, other than these claims, they are not subject to GST, which means though the first part is an actionable claim, Schedule 3 tells that no GST. GST will be only on the second part, which talks about betting, gambling, lottery, horse racing, online, money gaming, in all these areas. In all these areas. Here, it is not covered by Schedule 3. Schedule 3 removes this. So, when Schedule 3 removes this, GST will be on the second part. See, all actionable claims are goods, but GST is not there on all actionable claims. All actionable claims are goods, but GST is not there on all actionable claims. So, Schedule 3 is talking about not supply. What is not supply? Actionable claims are not supply except your betting, gambling, lottery, horse racing, online money gaming, etc. These areas are subject to GST. These areas are subject to GST. Right. So that is about your 2Ps. So if you look at your 2Ps now, what are the 3Ps involved here? Product, process, and place. Product, process, and place. Right. Product is goods and services, done. Place is interstate, intrastate, done. What is left out? Process. What is left out? Process. So when you see your process, you will understand the other definitions. You're talking about your supply. You're talking about your supply. Actual supply, deemed supply, not supply. Supply mathematically is equal to actual supply plus deemed supply minus not supply. Actual supply plus deemed supply minus, you see the initial part of this, you will find this supply is equal to actual supply 2 parts, deemed supply 2 parts, not supply 2 parts. And supply is so crucial, so important. See what you are going to do if you find something very precious, very important. Let us understand it this way. If you find something very important at your home, some very special item belonging to you, maybe a special letter belonging to you of your school times or college times, will you keep it together along with normal items, or will you keep it separately? What will you do? If you find something precious in your collection, what are you going to do? Keep it very safe along with normal items, all your normal. What if you open your racks? Go home and open your racks. except for few girls. Guys, I trust fully. Your racks will be a mess. Right? What all items you will get from your rack, even you don't know. Long bag, something you have put in that particular drawer or rack, and when you finally take it out, you know, when we have to find something very importantly, we will not get it. If you don't want it, it will come in front of eyes again and again. If you are searching for something, this is a normal tendency, right? If you are searching specifically, it's something, right? You will not get it. In normal course, you'll get it. And if at all that is something very precious, so obviously what you'll do, you know that it is very difficult if you keep it together. You'll keep it separately, correct? You'll keep it. That is the preciousness of the term supply. All the definitions in GST Act is given in section 2. Supply is so important that they thought that we'll not define in section 2, we'll define it in section 7. We'll define it in section 7. So all the definitions throughout your journey, most of the, you'll find that definitions are always given under section 2 of CGST Act. Few definitions, section 2 of IGST Act, that area. But definitions are there in section 2. But suddenly supply is there in section 7 to show its importance. This is how I am important. So you don't look me down. You don't look me down. You don't underestimate my value. I am so precious, so important. Are you guys clear with this understanding? So now if you look at this particular point, so what are we seeing here? We are seeing here supply, section 7, actual supply, 2 parts, deemed supply, 2 parts, not supply, 2 parts, right? Then nature of supply we'll discuss. So actual supply, 2 parts. When you see actual supply, 2 parts, actual supply, first part is what activity? Any activity. What activity? All forms of supply. For in course of furtherance of business. For a consideration. What is the activity? Any activity, sale, transfer, barter, exchange, disposal, lease, license, rental, etc., 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 etc. These are only examples. These are only examples. Any activity, any activity. For what? In course or furtherance of business. For a, even this can be simplified. A, B, C. Activity, any activity. Business should be there in course of furtherance of business. Consideration should be there. If all three are present, actual supply. Actual supply. Right. Any activity is any activity. Clear. Now what is meant by business? Business is defined. Business is defined. When you see the definition of business, business is defined in 9 points. Again, section 2 only. You have to read it as 2 plus 2 plus 5. First 2 defines business. Other are all clarification. 2 plus 2 plus 5. Business. Business means any trade, commerce, manufacture, profession, vocation, adventure, wager, or any similar such activity. Anything which is very normal to understanding of business. But one important point. Whether or not for a pecuniary benefit. Your intention to earn profit is not allowed. If you tell there is a charitable trust registered under section 12AA or 12AB and selling goods, whether they have to pay GST? Yes. Your intention to earn profit is not allowed. Even if there is a charitable trust registered under section 12AA or 12AB of your Income Tax Act and they are selling certain goods, they are also required to pay GST. Their intention to earn profit is not allowed. Second, business is not only the main business but also incidental or ancillary business. There's a motor car company or motor vehicle company. Say for example Royal Enfield. So main business is selling the manufacturing and selling bikes, but they are also selling accessories, helmets, jackets, special accessories, special maybe silencer, etc., etc. Correct? That is also business. That is also business. Are you guys clear with this understanding? So GST is on main business as well as incidental ancillary business. Your intention to earn profit is not relevant. Pecuniary benefit is not relevant. Now, second two, this defines business. Second two, clarification. Whether there is a volume or not, frequency is there or not, continuity is there or not, regularity is there or not relevant. You may be selling 1 unit or 100 units or 1000 units, pay GST. May be selling frequently, or you may be selling once in 2 months or once in 5 months or once in a year, not relevant. Regularity, continuity, volume, and even frequency, not relevant. Not relevant. I may be a real estate agent. Once in a year, I may be cracking one deal. But still, it is my business. On that commission, I have to pay my GST. And GST is not only on the main business supply, but also on capital goods and capital services. ICI tomorrow can change this projector and purchase new projector. Whether sale of the projector will attract GST by ICI? Yes, very much. So you are selling your capital assets. I may find some problem with this camera and the system, or even this tab for some matter, for some reason. I am selling all these equipments and buying new equipments. My main business is not selling these systems or cameras or tab, but still it will attract GST. So any business house will have capital as goods and services. When they are selling it, should they pay GST? Yes. They have to pay GST even on sale of the capital goods or capital services. Clear? Clear? Two clarifications. So then what are these 5 points? 5 points are specific clarification. Specific clarification means what? It is not for all the industries, it is for a particular industry. Say for example, first point is only for clubs and associations. Any clubs and association, if they are collecting any fees from the members, it is business. You will find clubs or association or society collecting fees from the subscription fees or any other fees from the members. If you are there in residential society, the society may be collecting monthly maintenance charges subject to GST. It is business. It is business. Club, association, society cannot tell that no, it is not business. GST law presumes it to be business. First is for club, association, society. Second is admission to any premises. If there is any place where you have to go and pay the entry fees for entering into that premises, that is business. If you go to Statue of Unity and if you are asked to pay entry fees, that is business. If you go to Taj Mahal and if you are asked to pay entry fees, that is business. If you are going to a wildlife sanctuary or zoo, if you are asked to pay entry fees, that is business. If you are going and watching IPL match, you are asked to pay entry fees for that stadium. Is that business? Yes. Any place where you are going to pay entry fees, that is business. That person cannot tell, see, I am collecting entry fees not as business, only to maintain the crowd and all. No. That is treated as business. Likewise, any service supplied by an holder of an office which is accepted by him in course of furtherance of his trade, profession or vocation. Tomorrow, if Adani Limited appoints me as an independent director because of my business, profession or vocation, my say expertise in say GST area. Now, can I tell that it is not my business? It is treated as business. I may be sitting in a cabin in Adani Limited, but I am not employee of Adani Limited. I may be sitting in a cabin of Adani Limited company. The big premises of Adani Limited, there may be a cabin allotted to me for an independent director. But technically, am I the employee? I am not getting salary. I am not getting salaries outside GST. I am getting professional fees. That is subject to GST. It is my part of my business. Right. Activities of race club. We have discussed. When you talk about your betting, gambling, lottery, horse racing, online money gaming, etc., they are all subject to GST. This is clarification. For anything done by race club is subject to GST. Finally, any activity by government So they are trying to tell that government itself is not outside the ambit of GST. If you might try to let that if government is doing something for the citizens, you cannot call it as business. Say for example, if you're going and making application for passport or visa, government may charge some amount. Can you tell that government is doing business? In general, you might not tell, but GST law tells that it is. Now it sounds absurd, right? Government is collecting GST from? No, government is very happy telling it. Government is not collecting GST from government. Government collects GST from the recipient. So along with the charges, government will now have GST. Supposing there's some activity done by the government which is charging say 1,000 rupees. So government was getting only 1,000 rupees. Now there is 18% GST. So government will get 1,000 rupees for the charges plus 180 rupees for GST shared between central government and. So government is not collecting from government. It is an indirect tax. Right? Government is happy or unhappy. If government knew this, government would not have put this. It is trying to increase the revenue of the government. Because GST is an indirect tax. So indirect tax burden will be shifted to the consumer. It is shifted to the. So please understand, government is happy in telling that even activity done by us is called as business. Activity done by us, central government, state government or local authority is called as business. Government is very happy in telling that our activity is classified as business even when we are engaged as public authority, which means there are certain activities which can be done only by government, which cannot be done by private entities, which can be done only by, still we'll call it as business. Right? Tomorrow no one should stand up and tell that, see, it is government doing something. It cannot be called as business. If it cannot be called as business, there is no supply. Because for supply to be there, it should be any activity in course of furtherance of business for a consideration. So government is very careful. Even our work, what we do, we'll call it as, what are the 5 sectors where they clarify that it is always business? Clubs association, premises, entry to premises, then holder of an office, any person who's holding an office in a company but he's not the employee of the company, holding an office. Next, you're talking about race club. Finally, you're talking about government. Finally, you're talking about, if you read all the 9 points together, it will make no sense. You will not understand what is business. But if you split it, 2 is meaning of business, 2 is general clarification, and 5 are special clarification for certain sectors. This is very simple. And by the way, understand that ICA never ever is going to ask any definitions. So there is no need to buy out anything. You have to just understand. It is never going to ask define this, define that, define this. No, you have to just understand it. And when you are reproducing it, they expect you to reproduce. Supposing there's a case study, they'll be giving case study and asking you whether the following activities amounts to business or not. A charitable trust is selling books to students. Yes, when you're writing it, you have to tell that this particular point, whether or not for pecuniary benefit. They expect keywords from you. Even grammar is not important, but they expect keywords from you. Clear? So what do you mean by supply? Actual supply. What activity should be done? What activity? Any activity, all forms of supply. Any, it need not be sale or transfer or disposal or barter or exchange or necessarily lease, license, rental. It can be any activity. My activity to you, is it supply? Yes, any activity, service. Any activity. In course of furtherance of business. For a consideration. What do you mean by consideration? What do you mean by consideration? Now you know any activity, you know business. What do you mean by consideration? Something in, that something in return can be monetary or that something in return can be for doing an activity or promising not to do an. That something in return can be for doing an activity or promising not to do an. Refraining from doing an act is also correct. Something written is for an activity or promising not to do an activity. Promising, we have read this at your foundation, when at the desire of the promiser, the promisee or any other person, right, does or abstains, right. So it is for doing an activity or promising not to do an activity. And when you're getting amount, it can be monetary or non-monetary, and it can be paid by the recipient or third person. If I am giving you coaching class services, it is not necessary that you make the payment of fees. Someone else on your behalf can make the payment of fees. Correct? Consideration can be paid by the recipient or someone else. Third party also is fine. Will I be adamant? No, I have provided you the service. You have to make the payment. No. Anyone on your behalf can make the payment. So 3 important points for consideration. What are they? It is for doing an activity. Something is written is fine. For doing an activity or promising not to do an activity. It can be monetary or non-monetary, payable by recipient or any other person. Now 2 important aspects are there. Now subsidy, whether it is consideration or not. We'll be discussing again in valuation. Subsidy. Subsidy by government is not consideration. Subsidy given by other than government is consideration. Subsidy given by government. Subsidy given by government is not a consideration. Subsidy given by any other person is consideration. Is included in consideration. Is included in consideration. Given by government, don't add in consideration. Given by other person, add in consideration. Add in consideration. Clear? Second clarification, whether loans and deposits are consideration. Loans and deposits are not part of considerations. Loans and deposits are not part of, they are mere transaction money. When you get a loan or deposit, loan is for financial assistance, deposit is for security purposes. What is the common point in loans and deposits? They are repayable. Be it loan or be it deposit, they are repayable. Mere transaction in money. Mere transaction in, not part of consideration. But when a deposit converts into consideration, for example, for getting a telephone line, you pay deposit to BSNL company 5,000 rupees. Whether 5,000 rupees will attract GST? No. You did not pay the telephone bill for 3 months. You did not pay the telephone bill for 3 months. From your deposit, they adjust 3,000 rupees. 2,000 rupees is still deposit, but they adjusted forfeiting the deposit. They adjusted your deposit. That 3,000 is what now? That 3,000 is nothing but consideration for the telephone service or telecommunication service given for 3 months. As you are not making the payment, we are adjusting from your. Now, please understand that 3,000 loses the character of deposit. Loses the character of, because it is adjusted against consideration for telecommunication service. It is adjusted against consideration for telecommunication. What about 2,000 rupees? Still deposit, no GST. Still deposit, no GST. So this is everything about your. See, when you see your actual supply, actually it's very simple. 3 components. What kind of activity are we talking about? What kind of activity are you talking about? Activity can be any activity. It should be in course or furtherance of business. It should be for a consideration. It should be for a actual supply part 1. When you see actual supply part 1, actual supply part 2 is over. Automatically over. What is actual supply part 2? Activity by a non-individual and its members, which means club and its members, association and its members, society and its members. So whether activity is there? Yes. it should be for a consideration. Whether consideration is there, whether business is there. Yes, because when you talk about clubs and members, we have seen that provision by a club or association or society for a subscription or any other consideration for facilities or benefits given to its members is always included in, is by default included in business. So business they have not given, but it is silently there. When you see the definition of business, any activity between club and members or association or members or society and members is always treated as this. You understand when you see the definition of business. Then one doubt will come. So if at all the three are actually present, then why to tell two parts? One part was sufficient. First part of supply is wide enough to cover second part of supply. True? Because any activity, here also any activity. Business present, here also business present. For consideration, here also for consideration. Here it can be between any two persons. Here it is between clubs, members or association, members or society, members. Correct? So, part 1 was wide enough to cover. Your part 1 was wide enough to cover. Then why give it? To overrule a Supreme Court judgment where Supreme Court said that clubs and members are same. Now they are trying to clarify that no, club is separate, members are separate. Association is separate, members are separate. Society is separate, members are separate. It is only a clarification given. It is only a clarification given. For what purposes? For what purposes? Clarification given for what purposes? Clarification given to overrule a Supreme Court judgment where it held that clubs and members are one and the same. Can I supply coaching class service to myself? Can one person supply goods or service to himself? One cannot supply to himself. One cannot supply to, but Supreme Court said that clubs and members are the. Now, what to do now? To overrule a Supreme Court judgment, there's only one possibility. Amend the, what they amended? They clarified actual supply and they said that clubs and members are now separate persons. Clubs and members are now separate persons. They are not the same, they are separate persons. They are separate persons. That is actual supply. Over. Actual supply, both part 1 and part 2 contains same three elements. Activity, any activity. Business should be there. Consideration should be there. The difference is first part of actual supply is by between any person to any person. Second part is between clubs, association, society and their members. They are treated as separate members. They are treated as separate persons. Are we guys clear with actual supply? Are we guys clear with your? Now, what we have understood from your supply is supply can be categorized into three parts: actual supply, deemed supply, not supply. Actual supply, there are two parts which you have seen, and both are actually one and the same only. Any activity, business, one area specifically given, one area silently there, and it should be for consideration. The only difference is in actual supply, first part, it can be between any person to any person. The second part, it is between clubs, associations, society, etc. and their members. They are treated as separate persons. Now, deemed supply, first part, is only talking about one particular activity called as importation of services. Importation of services. So, it is focusing only on one part, importation of services. Activity cannot be anything else. It should be importation of services. So, here the activity is restricted. It is importation of services. Should it be for consideration? Yes, it should be for consideration. Business may or may not be there. Business may be there, may not be there. It may be in course or furtherance of business. It may not be in course or furtherance of business. Importation of services. Activity is not any activity now. Activity is importation of services. Consideration should be that, and business may or may not be there. May or may not be there. This is deemed supply part 1. But when you see deemed supply part 2, again things are different. Activity is not any activity. It is activities given in schedule 1, 4 cases. So 4 notified activities given in schedule 1, not any activity. See, deemed supply is very clear that it is not any activity. Deemed supply part 1 activity is only importation of services. Deemed supply part 2 activity is schedule 1, 4 cases. Consideration, not that, without consideration. The other name of schedule 1 is supply without consideration. Consideration, not that. Business, silently there in all cases. If you see schedule 1, 4 cases, you will get a hint that it talks about business indirectly. The first point is permanent transfer or disposal of businesses. The second point is supply between related person or distinct person in course or furtherance of. The third point talks about supply between principal and, obviously when there will be a transaction between principal and agent, it is always a business transaction. Last case, importation of service, etc. in course of furtherance of. So if you see schedule on 4 cases, business is there. Business presence is there. Correct? So when I tell business is silently there, does it make sense now? Right? Activity is 4 notified activities in schedule 1. Consideration, not that. The other name of schedule 1 is supply without consideration. The other name of schedule 1 is supply without consideration. So your consideration is not there. Business is silently there. So if you compare deemed supply, both the cases, you will find that in one area, consideration is there, business may not be there. Correct? In the other area, consideration is not there, business is there. So very clearly, very categorically, one thing is very evident, very clear, that either business is absent or consideration is absent. Because one of them is absent, there's a need to see deemed supply. What is deemed supply part 1? What activity? Only importation of service. Second, consideration. Business may or may not be there. Mainly not there is important. May not be there. Deemed supply part 2. What activity? 4 notified activities of schedule 1. And consideration, not there. Business, silently there. If you see all the 4 paras of schedule 1, we will find business presence. But the interesting part is, deemed supply part 1 focuses only on one activity, which is importation of services. Part 2 focuses on 4 activities of schedule 1. Out of 4 activities of schedule 1, the last activity is again importation of service from related person or establishment outside India, that is branch office outside India, in course or furtherance of business. This importation of services is one of the very important area, for I say repeatedly, questions have been tested from here. Reason is, it's quite interesting. It is there in many places. So why the focus is only on importation of service? Why not on importation of goods? Why not on importation of goods? Very simple reason. Importation of goods is subject matter of Customs Act. So you have to look in customs. So it is not being touched here. So the focus is only on importation of service. If you were to understand this concept fully, you are talking about importation of services. One area, that is consideration. Other area, that is no consideration. And when there is consideration, it may be in course of furtherance of business, or it may not be in course of, correct? It may be in course of furtherance of business, or it may not be in course of furtherance of business. Both the possibilities are there. Got that? Now, these are all multiple permutation combinations. If there is importation of services and it is for consideration and there is business, then what it is? Forget about deemed supply. It is actual supply. There is no need of even deemed supply. It is actual supply itself. Though it is actually covered in deemed supply, but that's no requirement. It is very much covered by actual supply. Second, if there is importation of services, there is consideration, but there is no business, then deemed supply. Right? If there is importation of services, there is no consideration and business is there, but it should be from related person or branch office outside India. If it is from unrelated person, the answer is different. So now there is an extra condition. There is the importation of services. There is no consideration. It is in course of furtherance of business, but it should be from related person or branch outside India only. Then it is deemed supply in terms of para 4, schedule 1. Para 4, schedule 1. But if I tell that there is importation of services and there is no consideration and there is business, but it is from unrelated person, then it is not at all supply. See, please understand, when consideration is there and business is not there, by default it is deemed supply, no extra condition. But ulta, when consideration is not there and business is there, there should be an extra condition that it should be from related person or establishment outside India, that is branch outside India, for it to be covered by deemed supply. If not, it is not supply. And lastly, if I tell it is importation of services, no consideration, if both B and C are absent, simple, not supply. It is not at all supply. If both B and C are absent, it is not at all supply. So things are very, very simple here. Are you guys clear with this understanding? So things are very crystal clear here. That this importation of service can be anything. You have to look at the question carefully, then analyze whether it is deemed supply or actual supply or not supply. You have to look at things very carefully. Very, very carefully. Are you guys clear with this entire understanding? Right. Now, if I ask you a question, see, related person, there's a definition. What is the definition of related person? You see the definition of related person, you split into 3 parts. First, you're talking about officers or directors in one other business. I am the officer or director in Praveen Jain's business and he is officer or director in my business. So we are related person. Officer or director in one other business, or we are legally recognized partners, or employer employee. We are talking about employer and employee or members of the same family. Members of the, please understand, family is very crucial here. I see a place with this term family because family means what? Family means your spouse and children unconditionally, no condition. But when you talk about parents, grandparents, brothers and sisters, they are family only if they are wholly or mainly dependent. They are not your family if they are independent. Only if they are wholly or mainly, dependent. Otherwise, no. Spouse and children are always family whether they are dependent or independent. But when you talk about parents, grandparents, brothers, sisters, they are family, members of same family only if they are wholly or mainly dependent. That's the first part. What's the first part? Officer or director in one other business, legally recognized partners, employer, employee, and members of the same family. Second part, one of them directly controls the other. Supposing VJ Limited, PJ Limited, my company and Pravin's company. So I am controlling PJ Limited or PJ Limited is controlling my company. One of them is controlling the other. So both are related person. Or both of them are directly controlled by third person. So VJ Limited, PJ Limited is there. There is, say, Reliance Limited controlling both VJ Limited and PJ Limited. So understand that Reliance Limited is not at all in question. The question is all about transaction between VJ Limited and PJ Limited. Now VJ Limited, PJ Limited are related if third person. Who's that third person here? Reliance Limited is controlling both VJ Limited and PJ Limited. Control means 51% shares. Correct? Now this point is diluted because of the last point. See, look at the last point. Any person means third persons, directly or indirectly owns, controls or holds more than 25% of shares in both of them. Now there's a dilution. Now I said Reliance Limited should control 51% shares in VJ Limited and PJ Limited. Then VJ Limited, PJ Limited are related. But now when I say the last point, Reliance Limited need not contain 51% in VJ Limited, PJ Limited. It can just contain 25% in VJ Limited, PJ Limited. VJ Limited, PJ Limited are related. Then you might tell, what was the need of second point when the last point was, see, more than or equal to 25% covers 51% also. More than or equal to 25% covers. But understand, there's still a difference. When I tell control here, control need not be always financial control. It can be management control. It can be, got that? So here financial control means 51%. Management control need not have any percentage in voting shares. Got that? So here it is that. In a nutcrux, Reliance Limited controlling VJ Limited, PJ Limited. PJ Limited, PJ Limited are related person. Reliance Limited not controlling VJ Limited, PJ Limited, but having 25% or more voting shares in VJ Limited, PJ Limited. Both are, who are related? VJ Limited and PJ Limited are related. Finally, the last point here. One, together they are directly or indirectly controlling. Now this time, we are talking about VJ Limited and PJ Limited together having more than or equal to 51% shares in Reliance Limited. Now Reliance Limited is not at the top. Reliance Limited is at bottom. VJ Limited, PJ Limited controls Reliance Limited. Not individually 51%. It can be VJ Limited 21% and it can be PJ Limited 35% or 30%. You got that? So Reliance Limited is together controlled by VJ Limited, PJ Limited. How? VJ Limited having 20% or 21% shares in Reliance Limited. PJ Limited having 31% shares in Reliance Limited. Together, are they having more than 51%? Yes. It is reverse now, ulta now. So what was the control here, third party, Reliance Limited, controlling VJ Limited, PJ Limited. So here they talk about 2 points. First they talk about control, 51%. Then they tell that no, control is not relevant. Even 25% is sufficient. Even 25% is sufficient. And please understand that the focus is on whom? The focus is on VJ Limited, PJ Limited. Reliance Limited is third party. Now, ulta scenario. VJ Limited, PJ Limited is together controlling Reliance Limited. When I tell together, the point here is they are not talking about individual. They are talking about together. That should be control. Which means VJ Limited can have 21%, PJ Limited can have 30%, or VJ Limited can have 11%, PJ Limited can have 40% together. I'm not writing control twice. Together, that should be control more than or equal to 51%. In that case, focus is on whom? Focus is on still on PJ Limited, PJ Limited. Clear? Clear? So that is discussed here. And finally, you're talking about the last aspect where one is the sole agent or distributor or concessionaire of the other. If Reliance Limited appoints me as the sole agent or sole distributor pan India, then there is a related relationship between me and Reliance Limited. We are related persons. We are related persons. Or if VJ Limited appoints PJ Limited as sole agent, then VJ Limited and PJ Limited are related person, even if there is no shareholding. Sole agent means only agent throughout India. That is very great influence. If I have only one agent, don't you think that I can influence him or he can influence me? Why? First of all, doubt related person transaction, because related party transaction always will have some doubt that they are not genuine. The values are not true. The values are not true. So that is the entire understanding of related person. What I said, if you want to understand related person in a very simple way, split into 3 parts. First part containing 4 basic points. Officer, director and one other persons, legally recognized partners, or employer-employee, or members of the same family. Second part is all about shareholdings. And the last part is sole agent. And the last part is, so your understanding of related person is very, very simple and basic. Now, why we were saying this related person in entirety? We were saying this related person because of one point, that in importation of services, you have to be a related person. If there is consideration, but business is absent, no need of extra condition, it is a deemed supply transaction. But if there is no consideration and business is absent, it can be deemed supply only if it is from related person or branch office outside India for it to be deemed supply in terms of para 4 schedule 1. You have to look at the question carefully. Just answer this question. Mr. Ram, a well-reputed businessman of India. Mr. Ram, a well-known businessman of India, gets a legal opinion from Mr. Lakshman, a well-known advocate settled in London. A well-known advocate settled in London for a business dispute. For a business dispute. As both of them are own brothers, Lakshman did not charge any fees. Lakshman did not charge any fees. Yes. Who's the supplier, by the way? Mr. Lakshman, well-known advocate settled in London. Who's the recipient? Ram, a well-known businessman in India. And what is the service? There's a legal service given by him for a business dispute. Whether there's any relationship between them? Yes. They are brothers. Whether any consideration is charged? No. Free. Free. First, is it importation of service? Point number 1, is it importation of service? True. Whether there is consideration? No. Is it in course or furtherance of business? Yes. Now, when there is importation of services where there is no consideration but business, there should be an extra condition that it should be from. Is it from related person or branch office or establishment outside India? No. Brothers are not related. Why? Because family, members of the same family, related person includes members of the same family. Family means spouse and children unconditionally. Parents, grandparents, brothers and sisters only if they are wholly or mainly dependent. Wholly or mainly. In this case, there is no dependency. In this case, there is no dependency. Both are well reputed advocate, one person, and other is well known businessman. There is no dependency. So whether it is deemed supply, it is neither actual supply because there is no consideration, nor it is deemed supply, nor it is. If I replace Lakshman with Sita and tell that they are spouse, if I change the question and replace Lakshman with Sita and tell that Ram and Sita are spouse, then it is because now they are related person. Now they are. Are we clear with this understanding? Are we guys clear with this understanding? Why ICAI have a great obsession over this is clear? Because ICAI knows there are so many permutation combination when it is all about importation of services. You cannot have one clear answer. There are multiple permutation combinations when it is all about your importation of services. Importation of services. And by the way, importation of services taxed under RCM. It's taxed under supplier outside India will not pay the tax. It is recipient in India will pay the tax under RCM. Normally, who's liable to pay tax to the government? Supplier. But in RCM, it's recipient. In RCM, it is the. Also, please understand that whenever we are talking about any condition, it is from the eyes of supplier. Say, for example, we are talking about business condition. Normally, it is from the eyes of supplier. But in RCM case, it is from the eyes of. So, when I am telling it is in course of business or not, if it is RCM, that business criteria is to be evaluated from whose eyes? Supplier's eyes or recipient eyes? See, supplier will always give something in course of business. But in case of RCM, we are looking from the eyes of. So, this condition needs to be analyzed from whose angle? Okay, I'll make you understand a different way. Supposing it is not a business dispute, it is a personal dispute. Some personal dispute. Nothing related to business. Now, Lakshman still is giving legal services in course of his business. As a supplier, I am still giving you in course of my business. Correct? Correct. But as a recipient, you are not receiving it in course or furtherance of business. For you, it is not business. Okay, let me take even my example. As a supplier, I am giving you coaching class service in course of furtherance of my business. As a recipient, you are not receiving in course of furtherance of your business. Correct? You still to start. You are not started doing any work for it. It's not a training session for GST for practitioners. It's for students. So you don't have anything to do with your business. But you're looking from whose eyes? My eyes. Because normally who has to pay GST? So you're checking this condition from whose eyes? Supply eyes. But if it is RCM, you have to check this condition from whose eyes? So always understand that in GST, there are a lot of places where you look it from the eyes of supplier. Whenever you look it from the eyes of recipient, it is only one case where you're looking from the eyes of recipient. What is that case? In RCM case, you look it from the eyes of recipient. Otherwise, by default, you look from the eyes of, you see the entire GST Act from the eyes of, it is like explaining Mahabharata. The entire Mahabharata that generally we see is from the eyes of Lord Krishna. Correct? Correct. Now there could be a side of Karnan as well. There could be a side even of Duryodhan for that matter. Right? But it is everything is seen from the eyes of Lord Krishna. Not even Arjuna. It is only seen from the eyes of Lord Krishna. Got that? If you change the table and if you tell that, okay, show me Mahabharata from the eyes of Duryodhan, don't you think that things will be different? He'll be the hero. Yes, he will be the hero. Don't be surprised. He is having all the rights for him to be the hero. And this is very important when you are running law. What if I tell you that you have been taunted throughout your life about your dad? That he is blind, so are you. Don't you think that you will have some grudge against those persons who said it, or against those persons who said it and nearby you are standing, you did not say it but you are cheering it? Correct? So there will be something. Don't you think that when you are a very capable Kshatriya, very capable of expanding your kingdom, which you are doing for a long time, suddenly it is said that no, now give the kingdom to someone else. Things will be different. Rather, why only Duryodhan? Who is the most culprit character in entire Mahabharata? People are forgetting the fact that Shakuni did whatever he did because he had a reason, backstory, which no one generally bothers. Right? He never wanted his sister to get married to a king who was blind. It was all done with a deceit. Correct? If you are having a sister who is getting married to a blind person and it is all done by deceit and power, don't you think that you will have that grudge? Correct? And the story doesn't stop here. What if it is said that the person who took his sister by deceit and by force, he was not aware that she is having some gunadosham. Correct? It was whose fault? You should have asked, not said. Finally, for that gunadosham being aware, what happened? What happened? Bhishma Pitama got very angry. And he put entire family of Shakuni house arrest till the entire, not only close family, entire kul, till everyone dies. Every day one handful of rice would have been given to them, that you have it. And every Shakuni saw everyone dying one by one. All his own brothers, cousin brothers died one by one. And finally to die was his father, who said him that whatever things they have done to us, make sure that you do take revenge. And as Shakuni had a very bad habit of gambling, there was a kick given by his father to Shakuni on his leg to make sure that there is a damage, permanent damage in his leg, so that whenever he walks and he is not going to walk properly from now onwards, he is reminded that he is alive for what purposes. And then you look the entire Mahabharata from the eyes of Shakuni. He is the real hero. He never wanted anyone to win. All that he wanted is entire family to get destroyed. So it is not that he was in favor of Duryodhana. He wanted every person in this entire family to be destroyed, which he finally achieved. If you see the end of Mahabharata, not only the place when you're talking about Kurukshetra, after that, he finally achieved that. It is different point of views. Different. So apply this in GST. So normally when you look at GST law, you look from the eyes of supplier. You look from the eyes of So you look normally, say for example, from Mahabharata's perspective, you look from the eyes of Lord Krishna, supplier. But when you talk about RCM, you look from the eyes of recipient. You look from the eyes of, you change the table and look at the story from his point of view. So this is from the point of view of recipient. Why? Importation of services under RCM. Importation of services under. Now, deemed supply, there are two parts. The first part is over. And when you talk about the second part, we have seen 1 point. Fourth para is over, correct? Fourth para is over. Now, what are the other areas of deemed supply? Part 2, which is Schedule 1, 4 cases, correct? Schedule 1, 4 cases. What is the first case, first para? Permanent transfer or disposal of business assets on which it is all talking about gifts and free samples. Simple. Gifts, free samples. Gifts, free samples. If I am Reliance Limited, if I am giving you gifts and free samples, should I pay output tax? For me to give gifts and free samples, first I should have purchased it. Correct? Correct? So if at the time of purchase I took ITC, when I am giving you as gifts and samples, free samples, I have to pay output tax. If at the time of purchase I have taken ITC, when I am giving you that as gifts or free samples, permanent transfer or disposal of business assets on which ITC has been availed. Permanent means not temporary, correct? So that is the reason we are talking about gifts and free samples. Gifts and free samples. When you are writing an exam, you cannot write gifts and free samples. You have to write permanent transfer or disposal of business assets on which. But what is the essence? Gifts and free samples on which ITC has been availed. On which ITC has been. If I am Reliance Limited and I am giving you gifts and free samples, I did not avail ITC. At the time of purchase, I did not avail ITC. It's not a deemed supply. It's not a. If I took ITC, I have to pay output tax, deemed supply. If I did not take ITC, I need not pay output tax. It is not deemed supply. Simple. If I have enjoyed input tax credit, I have to pay output tax, deemed supply for gifts and free samples. If I did not take input tax credit on my purchase, no need to pay output tax on gifts and free samples. It is not deemed supply. It is not deemed supply. It is gifts and free samples, but ITC is not being availed. So that is para 1. Para 1. Para 2. Supply between related person and distinct person. Related person meaning we have seen three parts. Supply between related person and distinct person. Related person and distinct person. It's always deemed supply. They always tell that by default it is deemed supply. All you need to understand is, if at all you are talking about related person, say V Limited and P Limited, there are two separate entities. For you to call it as related person, there should be two separate entities, not necessarily companies. It can be proprietorship, concern, partnership, firm, LLP, anything. Right. When you talk about distinct person, you are talking about, say, V Limited in Tamil Nadu and a branch, V Limited, another branch in Tamil Nadu, or V Limited in Tamil Nadu, V Limited in Maharashtra. So you are talking about branch office. You are talking about head office, branch office 1, head office, branch office 2. Here you are talking about related persons. Here you are talking about related persons. Say one is holding company and one is subsidiary company. So that is a fact. Right. Now when you talk about related person, there can be consideration, there may not be consideration. But when you talk about branch office transaction, surely there is no consideration. Surely there is no one is going to charge from its own branch office. Correct? Correct. Now, if at all you're talking about first transaction, VJ Limited, PJ Limited, or V Limited, P Limited, Related party transaction, consideration is there. What is the answer? Actual supply. Actual consideration. Consideration is not there. Don't worry. Deemed supply. Deemed supply. Para 2, schedule 1. Right. In the second scenario, where you're talking about same company, VJ Limited or V Limited, same company, head office and branch office in the same state. If at all they are in the same state, they'll be having same GST number. They'll be having same GST number. So technically they'll not be distinct person. They'll not be distinct person. So it is neither actual supply nor deemed supply. It is not at all supply. If they are there in different state, normally if you're in different state, for surely you'll have different GST number, and now you're called as distinct person. Now you're called as distinct person. Therefore, this would be deemed supply. Now look at all these 4 examples. 2 are from the angle of, 2 are explained from the angle of related persons, correct? First 2 are explained from the angle of related persons, and next 2 are explained from the angle of distinct persons. In the first case, there is related person and there is consideration, so actual supply. Second case, there is related person, though there is no consideration, but still it is deemed supply. In the third case, they are not at all distinct person because you're talking about branch in the same state. Normally, it will have the same GST number, not distinct person, not supply. In the fourth case, you're talking about branches in 2 different states of the same company. So they'll be called as distinct person. Therefore, though there is no consideration, it will be called as deemed supply. Deemed supply. Are you clear with this understanding? So that is all about your second para, supply between related person or distinct person. Don't you think that related person includes employer-employee? Correct? And it is very common practice for a company or an employer to give gifts to its employees. Correct? So they give it an exception telling that if at all an employer is giving gift not exceeding 50,000 per financial year per employee, it is not at all a supply. It is not at all a supply. Forget about actual supply, deemed supply. It is not at all a. But when gift value is not exceeding 50,000 per financial year per financial year per financial year per. Are you guys clear with this understanding? Are you guys clear with this understanding? Please understand that this is workable only if ITC is not availed. Okay, let me give all the permutation combinations first. Focus on my question. Have full attention. You'll get more clarity. Basically, it is talking about gifts, which is even covered in first para. Correct? Supposing I am Reliance Limited. I am giving gifts to unrelated persons. Supposing you are all my vendors or customers. Vendors, that is suppliers, or my customers, or my bankers, or my chartered accountants, whatever it is. Unrelated person. During Diwali, I am giving you gifts. I am giving you gifts. I am giving you. If I have to give you gifts, I should have purchased it. I purchased it. I took ITC. Now I am giving you gifts. Is it deemed supply? But if I have availed ITC, I have to pay output tax. If I have availed ITC, I have to pay. So my gifts, Reliance Limited giving gifts to their vendors, customers, or bankers, or auditors, etc. GST will be there. Why? When the same was purchased, ITC was availed. If ITC was not availed, not a supply. If ITC is not availed, not a supply. Here, whether the value is relevant. Whether the value is relevant. Value is not at all relevant. Whether it is 50,000 or less than 50,000 is not at all relevant. If Reliance Limited is giving gifts to unrelated person, the only thing you need to ask is whether ITC is availed or ITC is not availed. If ITC is availed, whether you'll ask the value of the gift? No, you will not even ask the value of the gift. If ITC is availed, it is deemed supply. If ITC is not availed, it is not supply. If Reliance Limited is giving gifts to related persons, not being employees, other than employees, say it is giving gifts to its subsidiary companies, giving gifts to its, so whether it is deemed supply. Now, whether ITC is availed or ITC is not availed, it is deemed supply. How? If ITC is availed, it is deemed supply in terms of para 1, schedule 1. If ITC is not availed, it is deemed supply in terms of para 2, schedule 1. Para 2, if Reliance Limited is giving gifts to related person, now specifically being employees. Now, it is very important for the value. If ITC is availed, deemed supply para 1, schedule 1. See, one thing is very common. If ITC is availed, you don't see to whom gift is given. It is always deemed supply para 1, schedule 1. Deemed supply para 1, schedule 1. Deemed supply. The question is only when ITC is not availed. If it is to unrelated person, not supply. If it is to normal related person, deemed supply. If it is to employees, and ITC is not availed, then you have to ask a question whether the gift value is up to 50,000 per employee per financial year. In that case, it is not supply. If it is more than 50,000, see, there can be two categories of employees. To one employee, it is less than 50,000. To another employee, I may give gift more than 50,000. It is deemed supply as per para 2, schedule 1. It is deemed supply as per para 2, schedule 1. Only and only when gifts are given to, this entire discussion is all about gifts or free samples. Only and only when gifts or free samples are given where ITC is not availed at the time of purchase. Whenever I have to give a gift of free sample, I should have purchased it. So if I did not take ITC, then I have to see to the employees if the value is up to 50,000 per financial year per employee, not supply. If it is more than 50,000 per financial year per employee, it is deemed supply. Supposing one category of employees have given gifts for 40,000, other category have given 70,000. 40,000 category gifts, not supply. 70,000 category gifts, deemed supply. On entire value, you have to pay GST. Not only the differential portion, on entire value. And that too. If I have not availed ITC, if I avail ITC, I will not even see to whom I am giving gifts. This point you have to clearly understand. If you have availed ITC, don't even see to whom you are giving gifts or free samples. It is deemed supply para 1, schedule 1. Only if you don't avail ITC, then ask. If it is to unrelated person, not supply. Not covered by para 1, not covered by para 2. If it is to related person, deemed supply, para 2. If it is to employees, special related person, if the value of the gift is up to 50,000 per financial year per employee, not supply. If it is more than that, deemed supply. If it is more than that, deemed supply. So this is nothing but your para 2, schedule 1. Para 2, schedule 1. Now what is para 3, the last part of deemed supply? Principal and agent. Which agent are we talking about? We are talking about a special agent where he can raise invoice under the name of under his own name. The authority is given by the principal to raise invoice under his own. As an agent, when you're raising invoice, you'll raise invoice under whose name? You will never raise invoice to the customer. Principal will give invoice to the customer. So you have to understand that normally when you talk about principal and agent, there will be an agent, there is a principal, there is a customer. Normally what happens? Agent will find the customer and principal will then raise the invoice to the customer. But special agent, what happens? There is principal, there is agent, there is customer. Agent will give invoice to the customer in his own name. Invoice will be that of agent. Invoice will be that of. If you guys are the customer, you'll always think that this agent is the owner. In reality, he is not the owner, but seeing the invoice, you'll always feel that he's the. Now, he is called as special agent as per Schedule 1. And this agent is nothing but normal agent. In case of normal agent, what is the normal agent going to get? Commission. Normal agent is going to get. So here there is actual supply of services. Agent to principal. Principal to customer, there is actual supply of goods. For me to explain deemed supply, first you should understand actual supply. If he is a normal agent, you're not even bothered about deemed supply. Supposing I am the principal, you are the customer, and there is one agent who has shown me the customer. I am selling to you. I'll give his commission to him. Who's supplying to whom? Agent is supplying to principal. I'll be paying commission for that. He is giving his services to me. I'll be paying commission for that. Actual supply of services. I'm going to sell the goods to you. Actual supply of goods. Both are actual supply. Both are working for consideration. Agent will get consideration, commission. I'll get consideration from you, selling price of the goods. Selling price of the goods. Then what is special in your deemed supply, or that is special agent as per Schedule 1? Who is a special agent, by the way? Special agent means a person who is having the right to raise invoice under his own name. For the customer, if you guys are the customer, you will think who's the owner? Agent is the owner. You will always think that he's the, in reality, he's not the owner. Principal is the owner, but you will feel that he's the owner. In that case, principal, when he's giving the goods to agent, it is not actual supply because there is no consideration. Here there will be consideration and here there will be consideration. But here there won't be any consideration. Why there is no consideration? But the goods belong to principal. Principal cannot charge anything from the agent. Though there is no consideration, it is treated as deemed supply of goods. Deemed supply of goods. And agent to customer, consideration will be there because customer will pay the amount. So that is actual supply of. What is the difference that you evidently see? It is not only about deemed supply and actual supply, it is also about goods and services. In the first case, agent to principal is actual supply of commission is the consideration, and principal to customer is actual supply of goods. Agent to principal, principal to customer, principal to. But in the second case, it is principal to agent. Though there is no consideration, it is deemed supply of goods. The sequence itself changes. Who's supplying whom is different. And what is the supply is different. Deemed supply of goods. And agent to customer. Because customer thinks who's the owner? Agent. It is actual supply of. There's no service. One is deemed supply of goods, one is actual supply of goods. One is deemed supply of goods, one is actual supply of goods. Actual supply of goods. Are we talking about normal agent in para 3 schedule 1 or special agent? We are talking about special agent. We are talking about special agent. Who is the special agent? Agent who is having the authority to raise invoice under his own name. Under his own name. So now when you look back at deemed supply and you look back at the entire concept of deemed supply, we are done with the entire concept of your deemed supply. Entire concept of your deemed supply. Deemed supply part 1 is only one activity, importation of service. Consideration is there, business may or may not be there. Deemed supply part 2 is 4 activities of schedule 1. Consideration is not at all there, business is silently there in all the 4 cases. In all the, what is the simple way to remember 4 cases? First is about gifts and free samples. Second is related person, distinct person. Third is special agent. Third is, you cannot write in exam special agent. But what is special agent? We have discussed. Fourth is again importation of service. Again, but a very different angle of importation of service. A very different angle of importation of service. So that is all about your deemed supply. Yes, when you talk about your not supply, again there are 2 parts. One is schedule 3 and the other is notified transactions. Schedule 3 and notified transactions. There are 3 notified transactions which is not supply. And the first notified transaction is connected to your para 2 schedule 1, which talks about supply between related person, distinct person, but here the focus is on distinct person. Please understand that when you talk about transportation sector, whether it is goods transportation or passenger transportation, when the trucks and buses are going from one state to another state, where they are registered, where supposing VR Logistics is registered in Tamil Nadu, it is also registered in Karnataka. If a truck is taking goods from Tamil Nadu to Karnataka, we are not concerned with the goods. Our focus is on the truck. Truck is also goods. Truck is also goods. Correct? Now, the problem with deemed supply para 2 schedule 1 is supply between distinct person. Is always supply. If there is any transaction between distinct person, is always VR Logistics is separate in Tamil Nadu and VR Logistics is separate in Karnataka. They are not treated as same person, they are treated as distinct person. So when the truck is going from Tamil Nadu to Karnataka, it is treated as deemed supply of truck. This is a big problem. Again truck will come back, again truck will go, again truck will come back. It might go from Tamil Nadu to Karnataka, then Karnataka to Maharashtra, then Maharashtra back to say Andhra, then to Karnataka, then to Tamil Nadu. Everywhere there is problem of deemed supply. So they understood this problem and they said that okay, for any conveyance which goes, comes back, which goes, comes back, which goes, comes back, and it need not be belonging to transportation sector, it need not be belonging to VR Logistics or say KPN Travels for passengers. It can be company's own truck. Reliance Limited can have its own truck for carrying the goods, correct? Will not charge GST. Will not charge GST. So for interstate movement of any conveyance carrying goods or passengers or rigs, tools or spares on them, always trucks will carry rigs, tools or spares parts on them. That is all goods on vehicles. Cranes also is covered. Or machinery like tower cranes, concrete mixtures which are not mounted on wheels. So basically, if I want to make it very simple, they're talking about conveyance and spares on the conveyance. Forget about special machineries and all. Basically, they're talking about conveyance and the spares on the conveyance. They're telling that we will not treat it as supply. We will not treat it as supply. Why? It goes, comes back. It goes, comes back. It goes, comes back. That's the purpose of that particular conveyance. So first point they talk about conveyance. Second point they talk about rigs, tools, spare parts on the conveyance, including all goods on wheels, that is cranes. Third point they talk about special machineries like tower cranes, concrete mixtures which are not mounted on wheels. So they tell that it goes, comes back. The purpose of it is to go and come back, go and come back, go and come back. It cannot be treated as deemed supply again and again, again and again, again and again. So relaxation is given for them. But the relaxation is only from what? The relaxation is only from deemed supply, not from actual supply. If I tell that particular conveyance is sold, if that particular conveyance is sold, it is sold. Actual supply, pay GST. If that conveyance is sold or spare parts are sold, it is actual supply, pay GST. If I tell that there's some problem in the conveyance, that's a breakdown of the conveyance, and it requires repairs and maintenance. When there is a repair and maintenance on that conveyance, it is again actual supply. It is again actual supply. If at all it is actual supply, there is no relaxation. You see both these exceptions here. What are these points? They are telling that in both these cases, there is pay GST. This relaxation is only from where? If it is actual supply, please pay GST. If VRL Logistics decides after 5 years, it is going to sell one truck. It is not sending the truck coming back. The truck is not going to be sent and come back. It is going to sell the truck permanently. Whether it has to pay GST? If one truck of VRL Logistics, there is some breakdown in the truck, and there is a mechanic who is doing repair and maintenance, whether he is charged consideration? Yes. Whether GST is payable? Yes. Relaxation is only from deemed supply. So relaxation is only and only from deemed supply, that it will not be treated as deemed supply, not from, if there is actual supply, please pay GST. Second and third notified cases are all about government. They are all focused on government activities. They are all focused on government activities. If government, normally any work done by government is business. Even government transactions are subject to GST, except these transactions. If at all there is a transaction undertaken by government in terms of Article 243G, Panchayat related functions, or Article 243W, municipality related functions, it is not supply. If government is charging you something for Panchayat related functions covered in Article 243G, or municipality related functions covered in Article 243W, not supply. It is not at all a supply, no GST. No GST. Or if government is, this is only for state government, if government is giving alcoholic liquor license against liquor license fees, against liquor license fees, it is not supply. This liquor license fees will be received only by state government, will be received only by, see, alcoholic liquor they want to keep entirely outside GST. So liquor license fees is outside the ambit of GST. But they have again clarified very categorically, telling that what is outside GST is only liquor license fees. Any government collecting any other license fees like mining license fees or telecom license fees or any other activity license fees, that is clearly subject to GST. What is the license fees which is outside GST? Liquor license fees collected by state government is outside GST. Any other license fees collected by any government, be it central government or state government or local authority. For example, mining license fees or telecom license fees, that is spectrum fees, or any other license fees, is clearly subject to GST. It's clearly subject to GST. So what are the activities of government which are outside GST? Panchayat related functions, Article 243G, municipality related functions, Article 243W, liquor license fees by state government, they are all outside GST. Any other amount received by government, be it central government, state government or local authority, GST is levied. GST is levied. Now there's a circular again explaining supply, whether donations will attract GST. Answer is no. Why? There is no quid pro quo. There is no contractual reciprocity. So when you are paying donation, the opposite person is not doing anything in return. So donation cannot be called as consideration. Consideration is something in return, correct? Donation does nothing in return. For donation there is nothing in. So no There's no question of any GST. But if you give donation with a clear-cut objective that I'm going to give this donation only if you do this. I'm going to give you donation only if you do this. Then it is subject to GST, because this now is not actually donation. It is consideration. It is, see, what is the first thing that you said when I spoke about consideration? Consideration means something in donation, nothing in return. If it is pure donation, nothing in return, it is not consideration, no GST. If I tell you have given donation and clearly said that the opposite person has to do these are all things, then it is something in return, though you are calling it as donation, but in reality it is not donation. Pay GST. Pay GST. Now that is one part of not supply. 3 notified transactions. The other part of not supply is schedule 3 transactions. Schedule 3 transactions. Now when you talk about schedule 3 transactions, the first point is employer-employee. So service by employee to employer in course or in relation to employment. Wages received by labor. GST, no GST. No GST. Bonus received by labor. Gratuity received by labor. No GST. If the laborer is seasonal laborer, no GST. Salary received by normal employee, no GST. Bonus received by normal employee. Gratuity received by normal employee. Salary and bonus, you can tell that they are all in course of employment. Gratuity in relation to employment. Gratuity is in relation to employment. Partners receiving remuneration from partnership firm, no GST. Technically they are not employees, but for the purpose of GST law, working partners of employees. For the purpose of GST law, working partners are equated with employees. What about directors? Again, a very important point for directors. Directors. So when there is directors, issue arises. So you have to ask whether the directors are managing directors, whole-time directors, or whether they are other directors. If they are managing director or whole-time directors, then what they get is remuneration. Even in your income tax, TDS will be deducted by the company under section 192. If they are other directors, what they are getting is professional fees or sitting fees. Even under income tax, TDS will be deducted by the company under section 194G. So when they get remuneration, they are acting like, technically they are not employees, but for the purpose of GST law, they are, employees. When they are employees, no GST. Here, when you are getting professional fees, you are not acting like employees. So when you are not employee, it is subject to GST under RCM. Who is the supplier here? Company is not the supplier. Director is the supplier. Company is making the payment. If I am the independent director of Reliance Limited, who is the supplier? I am the supplier. I am the supplier. Company is the recipient. So who will pay GST? Recipient means the company will pay the GST, RCM. Company is not the supplier. Director is the supplier. Are you guys clear with this understanding? Are you guys clear with this understanding? Now, please understand that both these directors can be giving other services. Can be giving other services. Can be giving other services. Say, for example, renting of immovable property. Renting of, they are having immovable property where the company is operating. So the property belongs to the directors. Say, for example, renting of immovable property. When they are giving other services, please understand that they are not even acting like directors. They're not even directors. When they're giving other services, they're not acting as directors. So whether GST will be there? Yes. And GST will be there under FCA. No, not RCA. They're not acting as directors. They're not acting as directors. So it is under FCA. It is under FCA. Now first, ask yourself a question. Are they acting like directors? Yes. If they are acting like directors, who are they? If they are managing director, whole-time directors who are getting remuneration, technically they are not employees, but for GST law they are employees. Evidence is there even in income tax, because the company will deduct TDS under section 192, TDS on salary. No GST. If they are acting like directors, but they are other directors, say independent directors, government appointed directors, nominee directors, etc., etc., they get professional fees. Technically, they are not employees. Even for GST law, they are not employees. Technically, they are not employees. Even for GST law, they are not. So the evidence for that is there in income tax. Company will deduct it is under 194. So GST will be there, but under, which means company will pay. Director is the supplier, company is the recipient, company will pay. Now, if I tell that they are not even acting like directors, other services, not getting remuneration, say for example, other services, renting of immutable property or any other services. So then they are not even acting like directors. They are like normal third party. GST will be there under HC. GST will be there under HC. Next, deemed employees. MP, MLAs, member of Panchayat, member of municipality. Who makes the law? These people make the law. Do you think that they will cover themselves under GST? No. MP, MLAs, member of Panchayat, member of municipality, no GST. Person holding constitutional post, President of India, Governor of State, Comptroller Auditor General of India, Chief Justice of India. They are not MP, MLAs, but they are holding constitutional post, no GST. Chairperson, member of director, not in government company. Don't confuse government and government company. Government is separate, government company is separate. In a body established by government, in a body established by government, central government, state government or local authority. Say for example, chairperson of CBDT, Central Board of Direct Taxes, or chairperson of CBIC, Central Board of Indirect Taxes and Customs. They may be getting something. Now, CBDT, CBIC is not government company. It is a body established by Ministry of Finance, Department of Revenue, which is nothing but government. This is nothing but government. No GST. No GST. If you want to remember in a very simple way, first is employees, second is deemed employees. Who are the three deemed employees? MP, MLAs, etc. Constitutional post, chairperson, member or director in which place? In government body, not government company. In government body, government department. In government body or government department, but not government company. Third, service by court or tribunal. Service by court or tribunal is outside the ambit of GST. We are not talking about service by advocates or arbitrators. We are talking about place. Service by court or tribunal is outside GST. Even Consumer Dispute Redressal Commission, which solves consumer disputes. Technically, it is not tribunal, but it works like tribunal. It has got a district commission, then state commission, then national commission. It works like tribunal, quasi judicial body, quasi outside GST. See, whenever you go and fight a case in court or tribunal, there will be some court fees or tribunal fees. Court fees are no GST. No GST. Next, service of funeral, burial, crematorium or mortuary, including transportation of deceased. Death person related services. Funeral, burial, crematorium or mortuary, including transportation of deceased. There's no question of any GST. Sale of land and sale of building, no GST. Sale of land and sale of building. But if it is construction of building, GST is there. That's the difference between sale of building and construction of building. If I am constructing a building and you guys are interested in that new building, one person is giving me full advance, second is giving me partial advance, third person is giving me no advance. The first two persons who are giving me advance, whether full advance or partial advance, it is construction. Whether you pay full advance or whether you pay partial advance. Conceptually, answer is same for both of you. The moment you pay me advance, I am doing work for you. What work? Construction work for you. Construction, supply of services. There's no difference between full advance and partial advance. But the third category, no advance means I made the building ready. Then he came and paid the entire amount. That is sale of, not supply. So out of three of you, one paid me full advance, second paid me partial advance, third gave me no advance. Where is the supply? In the first case, is there supply? Yes. Supply of construction services. Second case, is there supply? Yes. Supply of construction services. Third case, is there supply? No. Sale of building. Sale of building. It is not supply. It is not supply. How to differentiate first two cases and third case? What is the proof that the building is ready? What is the evidence that the building is ready? The proof that the building is ready either is your completion certificate or first occupancy, whichever is earlier. Whichever is earlier. At times, completion certificate takes times, but in that building there are 100 flats. The first person goes and occupies the flat. Building is ready. Building is ready. What is the only case which is outside GST? Last case. What happens in the last case? Entire consideration is received. Entire consideration is received after completion certificate or first occupancy. And the last point here, actionable claims. Actionable claims. Now, other than specified actionable claims, now that specified actionable claims are betting, gambling, lottery, horse racing, casinos, online money gaming. They have expanded the scope. Actually, it was sufficient. Lottery, betting, gambling is sufficient. See, when you talk about betting, gambling, lottery, your betting includes horse racing. In horse racing also you do betting. Casinos. Gambling is sufficient. Online money gaming is a new term. All the apps where you play games, all the advertisements that you see nowadays, where you play games and win amount, that is nothing but online. Online gaming which involves money is online money gaming. Online gaming which involves money is online. All these activities attract GST. Only these activities attract GST. What are the actionable claims which attract GST? Betting, gambling, lottery, horse racing, casinos, and online money gaming. Other actionable claims like sundry debtors, insurance claim, no GST. No GST. So these are the first 6 paras of your Schedule 3. How to remember it? Employees, deemed employees, court, deceased, land building, and actionable claim. Employees, deemed employees, court, tribunal, deceased, land building, actionable claim. So when you talk about your not supply, 3 points of notified transactions and 6 paras of Schedule 3. 6 paras of Schedule 3. And when you talk about your para 7 and para 8 of your Schedule 3, it talks about something related to your import and export. The first thing, that is para 7, talks about your drop shipment or merchant trading. It is not supply, which means if at all directly from Germany, the goods are taken to USA. So you are there in India. You are there in India. You purchase from Germany and you sell to USA, but the movement is directly there from Germany to USA. So that is purchase and that is sale. But the movement is directly there from Germany to USA. It is called as a drop shipment or merchant trading. This drop shipment or merchant trading, technically this purchase is not at all import and technically this sale is not at all export, because it never came in India, it never left outside India. So directly from Germany it went to USA. It is called as drop shipment or merchant trading. And this sale will not be treated as supply. Though it is sale, it will not be treated as supply, no GST. On purchase, it will not be treated as import, so there will be no import duty. On sale, it is not treated as supply, so there will be no GST. So this is all about your drop shipment or merchant trading. And para 8 talks about two aspects, and these two aspects are nothing but your sale of warehouse goods and your high sea sales. So you're talking about high sea sales and your sale of warehouse goods. Now what happens in high sea sales and sale of warehouse goods? The goods are imported in India by importer 1, but the goods are sold to importer 2. The goods are sold to importer 2. So the goods are imported by imported 1, but the goods are sold to importer 2. Supposing this import is happening again, say from Germany. Now understand that there is actual import happening. There is actual import happening. Both these importer 1 and importer 2 are there in India. But when the goods are there at your customs station or customs warehouse, the first place is customs station, the second place is customs warehouse. Normally, the goods from customs station will be taken to your premises, importer's premises. At times from customs station, you will take it to customs warehouse and then you will take to your customs premises. The title is transferred. The title is transferred. This title is transferred when the goods are there at customs station or customs warehouse. Understand that technically there is import. Import is there. But please understand that import is there, but the import duty will be paid by not importer 1 and importer 2. Importer 2 will clear the goods for home consumption. When the goods are sold, when they are there at your customs station, technically it is called as high sea sales. And if the goods were there at customs warehouse and then the title was transferred, it is called as sale of warehouse goods. Technically, the terminology is if the goods have not yet reached customs station or they are there at customs station, its title is transferred IC sales. If the goods are at customs warehouse and title is transferred, it is sale of warehouse goods. Understand that in both the cases, whether it is high sea sales or sale of warehouse goods, importer 1 will not pay import duty, it is importer 2 will pay import duty. And this particular sale transaction, this is technically called as your high sea sales or your sale of warehouse goods. When the goods have not reached customs station or at customs station and the title is transferred, high sea sales. When the goods are at customs warehouse and the title is transferred, sale of warehouse goods. Sale of warehouse goods. Now understand that this particular transaction where the sale is happening, supply is happening, it will not be treated as supply and GST will not be charged. Right, because importer 2, when he clears the goods, he will be paying import duty. The import will end only when importer 2 is clearing the goods for home consumption and import duty will be paid by importer 2. So before import duty is there, you cannot have GST. The previous transaction, customs duty will come when importer 2 is clearing it. So the transaction of sale between importer 1 and importer 2 happens before that. That particular transaction will not be attracting import duty. So if I were to present in this difference case, import is happening. Yes, import is happening. Yes, an import duty will be paid, but not by your importer 1, it is by importer 2. So importer 2 will pay your import duty when he is clearing it. A transaction before it, that is sale by importer 1 to importer 2, is not supply. There won't be any GST. So that is all about your para 7 and para 8 of your schedule 3. Drop shipment, merchant trading. Physically goods are not imported, physically goods are not exported. So not supply when you talk about sale. from India to USA. Directly movement is there from Germany to USA. Or high sea sales warehouse goods. There's a title transfer between importer 1 to importer 2 when the goods are at customs station or before customs station, high sea sales, or when the goods are at customs warehouse, sale of warehouse goods. In both the cases, that sale between importer 1 and importer 2 is not treated as supply, no GST, because import will get over only when importer 2 clears the goods and he'll be paying import duty, not importer 1. Now, a lot of things are clear when you know what you're seeing it. Now, people confuse this schedule 2 as supply. No, it is not about supply, it is nature of supply. And the best way to remember is, if you see the heading, it is very clearly mentioned supply of goods or supply of services. But you will only see G or S. So, better write it as supply of goods or supply of service. Supply of goods or supply of service. Motor vehicle is goods. Selling the motor vehicle is supply of goods. Renting the motor vehicle is, don't tell service, supply of service. Best way to explain it. Motor vehicle is goods. Selling the motor vehicle is supply of goods. Renting the motor vehicle is supply of, and best way to summarize your schedule 2. Schedule 2 is nature of supply. Schedule 1 is deemed supply. Schedule 3 is not supply. Schedule 2 is nature of supply. Supply of goods or supply of services. Supply of goods or supply of, what is the best way? If a transaction is involving goods and the ownership is transferred, it is supply of goods. If the transaction involves goods and ownership is transferred of the goods, supply of goods. If a transaction involves goods but ownership is not transferred, supply of services. Transaction itself is service. Supply of service. Supply of, a very, very simple and effective way to remember it. If at all it is, item is goods and ownership is transferred. Ownership is transferred. Only in that particular scenario, it will result into supply of goods. Otherwise, it is always supply of services. Very simple way to understand the entire schedule 2. Very, very simple and effective way to understand the entire schedule 2. So it should be, that should be goods, ownership is transferred or title is transferred, supply of goods. All the other cases, supply of service. If there is transfer in title of goods, I'll just ask the question, you give me loud and clear answers, right? Transfer in title of goods. Louder. If there is transfer in title of goods but in future period, which means higher purchase of goods, ownership will be transferred but not now, it will be transferred in supply of, ownership is going to be transferred, supply of goods. If there is right to use the goods but without transfer of title, without transfer of title, this point number para 1c is again repeated in your (5)F. Same thing. Right to use any goods. Right to use any, same thing. Supply of, title is not transferred. Supply of service. Next, if I tell sale of land and building, louder, loud and clear. Sale of land, sale of building. Renting of land, renting of building. Renting of land, renting of building. So if there is renting of land and building, it may be called as lease, tenancy, easement, license to occupy, etc. And the same thing is repeated again in para 5a, which talks about renting of immovable property. The difference is terms: lease, license, tenancy, easement, license, or here renting. What it is? Supply of If it is long term lease, if it is 99 years lease, if it is 999 years lease, it tells forget about your stamp duty laws, forget about your accounts where they differentiate financial lease, operating lease, etc. Forget about it. We will only see, is it lease? Yes, it is supply of service. Sublease, subletting, don't tell service. Subletting. If I let you out, you let out the other person. I have supplied you service, you have also supplied service. Supply of service. Job working. Job work. Treatment or process applied to other person's goods. It is nothing but job work. If there's a problem with the project or other system and I give it for repair, service. Supply of. If I give my fabric to the tailor and tailor gives me shirt, that's also job work. Treatment or process on goods belonging to another person, on goods belonging to, if there's a problem with your bike and you give to mechanic, supply of. Obviously, in all these three examples, that job worker will be using some of his own goods. Right, tailor will be using his own threads, own buttons. The mechanic shop may be using his water, grease, nuts and bolts. But the fact is, it is supply of service. Supply of service. Right. Now, para 4 will touch in the end. Para 1 and 2 and 3 is over. 4 will take it finally. When you talk about para 5 we have already seen. Construction. Construction of building. Construction of building. Works contract of building. So, construction and works contract, there's a small difference. Construction is pure labor. Works contract is material plus labor. Material plus both the supply of service. Both are supply of. Please understand that when this building is ready, I have two options. To tell that I'll purchase the materials, you give me labor, supply of service, construction. Or I tell the builder, I don't want the headache of purchasing cement, sand, bricks, etc. I don't understand it. You purchase cement, sand, brick, etc., etc. You give me labor. So now it is both material plus works contract. Still it is supply of, because I went to that builder not for cement, sand, steel, etc., etc. I went to him for his labor. So it's supply of service. Supply of service. What about your intellectual property rights and information technology software? Are they goods or service? No, they are goods. Item are goods. Intellectual property rights, IPR, patents, copyrights and all, or information technology software. Item is goods. Item is goods. Though they are not tangible, but they are goods. Gas is not tangible, but it is goods. IPR is not tangible, but it is goods. Information technology software is not tangible, but it is. But the transaction in it is generally supply of service. Why? Look at the language. Temporary transfer or permitting the use or enjoyment of IPR. Temporary transfer or permitting the use or enjoyment. If it is temporary transfer of IPR, supply of. What if I change the question and tell that permanent transfer of IPR? Don't tell it. It is by default goods. If it is permanent transfer of IPR, supply of goods. Supply of goods. Temporary transfer or permitting the use of IPR. Likewise, software is goods, but there are 8 activities related to software. They've used all the possible activities: adaptation, development, design, customization, upgradation, programming, implementation, enhancement. 8 terms. But they have not used the term sale. They have not used the term anything to do with software. Right from adaptation, development, design, customization, programming, upgradation, implementation, enhancement of software. It is supply of service. It is sale of software. If it is sale of software, supply of goods. Supply of goods. Refraining from doing an activity or tolerating an activity. Promising not to do an act. Supply of services. Supply of services. Supply of services. See, you need to understand IPR and ITS. By default, it is just like motor vehicle. Motor vehicle is goods. IPR, ITS is goods. Sale of motor vehicle is supply of goods. Sale of IPR, sale of ITS is supply of goods. Renting of motor vehicle is anything other than sale of IPR or ITS is supply of same thing. What about you going in break time to have a cup of tea or a vada from a vendor nearby? I'm talking about tea and vada. I'm very specific. Now biscuits solar. I've not spoken about biscuits, the packed biscuits and all. I'm talking about that cup of tea or a vada. Restaurant outdoor catering. Restaurant outdoor catering. Restaurant outdoor catering. Supply of. When you go to restaurant and outdoor catering, restaurant means you go to a place, you have food. Outdoor catering means you call them at your event place and they give you the service. It is supply of. Again, it involves both goods and. But what is the dominant nature? Why you go there? For service. You go there for the service portion. The last para 4. Para 4, only thing that you have to remember when you're seeing para 4 is you have to read it along with schedule 1. You cannot read it independently. Read this along with schedule 1. Schedule 1 and schedule 2 should be combined. Reliance Limited giving gifts to Tata Limited. ITC has been availed at the time of purchase. Reliance Limited is giving gifts. At the time of purchase, ITC is availed. Is it deemed supply? Is it deemed supply? Is it deemed supply? It is deemed supply. Now the question is, it is deemed supply of what? It is deemed supply of goods because title is clear. Clear. Reliance Limited is giving its helicopter to Mukesh Ambani for attending the wedding of Anant Ambani. Reliance Limited is giving its airplane or helicopter, which is a business asset, to Mukesh Ambani, Managing Director of Reliance Limited, for attending the wedding of Anant Ambani. First, is it supply? Then we'll see supply of goods or supply of service. First, is it supply? It is a supply. Reliance Limited and Mukesh Ambani are employer-employee. I said managing director. They are employer-employee are related persons. You go backwards. They are employer-employee. Therefore, they are related persons. See schedule 1, para 2. Supply between related person or distinct person. Even if it is without consideration, it is deemed supply. Is it supply? Yes. Now, is it supply of goods or supply of service? Why? After a few days, again the aeroplane or helicopter will come back to Reliance Limited. Supply of service. If I change this question, Reliance Limited gave this aeroplane or helicopter to Adani for some personal use by Adani. It is not at all a supply. Schedule 2 cannot convert any transaction into supply. First, if it is supply, then come here. If it is not supply, please don't come to schedule 2. Don't come to schedule 2. And finally, when a person ceases to be a taxable person, supposing if I am closing down my registration, understand GST law treats me differently. VJ Limited registered is different from VJ Limited unregistered. They are treated as distinct person. VJ Limited registered is different from VJ Limited and they are different person by per se. So if I am ceasing to be a taxable person, I am going to cancel my registration. When I cancel my registration, will I have a stock? Will I have a stock? Normally, when I am closing my business, high possibility that I have a. Don't you think that there's a possibility that I would have taken the credit? When I purchased that stock, I would have taken the credit. So is it deemed supply? Yes. How? Permanent transfer or disposal of business assets, that is stock, from VJ Limited registered to VJ Limited unregistered, on which ITC has been, it's deemed supply. First it is supply, deemed supply. And if it is deemed supply, what supply it is? Supply of, because ownership is now transferred from VJ Limited registered to VJ Limited. GST law treats them separately. In reality, they are one, but GST law treats them separately. Supply of goods. What if I tell that there's no stock? Then there's no question of any supply. What if I tell that there's stock but you never took ITC? See, schedule 2 will come into picture only if a transaction is supply. If it is not supply, please don't come here. And that is the reason I wrote here something which is very important. You have to read schedule 1 right along with, or you have to understand one very important feature or character of schedule 2. What is that feature or character of schedule 2? What is that important feature or character of schedule? Schedule 2 will tell it is supply of goods or supply of service only after you have decided it is supply. If it is not supply, please don't waste your time here. If it is supply, please come here. We'll tell you whether it is supply of goods or supply of services. And there's a difference between schedule 1, schedule 3 and schedule 2. Schedule 1 deemed supply, 4 activities only. Schedule 3 not supply, in total 8 activities only, in total 8 activities only. Schedule 2 does not talk about supply, it talks about nature of supply, and these lists are only examples. These lists are only. What is the best way to remember schedule 2? I started with the chart, I am ending with the chart. Goods, ownership, supply of goods. Everything else, goods, ownership, supply of everything else. Very simple. I think there's no other simple way to explain schedule 2 than this simple chart, because it is an illustration. All the points that you have seen in schedule 3 are all illustrative list. They are all, and the simple way to understand was only this scenario. If it is goods and ownership is transferred, supply of goods. Anything else, the supply of services. It is supply of services. Very easy and efficient way to remember schedule 2. Efficient way to remember schedule 2. Are you guys clear with this understanding? Right. There is only one exception when you talk about VJ Limited registered and VJ Limited unregistered. If at all the business itself is transferred as a going concern or to legal hire, when the business is sold either to your legal hire, that is personal representative, or to someone else, then the business is always treated as supply of service. When they are giving this exception, it means supply of service. When business is sold, you are not only selling the stock, you are selling the goodwill involved in it, you are seeing the future prospects, you are seeing the valuation. Correct? So it is said that it is supply of service. If we are not selling the business per se, if you are closing your business, VJ Limited registered, VJ Limited unregistered, both are separate. The stock which is given on which ITC is available is supply of goods. If you are selling the business to someone else, to your legal hire or personal representative, or to someone else, third party, then sale of business is actually supply of service. Why? You're not only going to value the stock, you're going to value a lot of other factors. You're going to see the future valuation. You're going to see the goodwill that is generated till now. No, it's not about title transfer. That is title transfer. But you are forgetting the fact, title transfer only of goods is supply of goods. But here the title transfer is not of goods. It is of business. Business does not only contain the stock. It will contain the debtors, creditors, goodwill, future valuation, etc., etc. So it will be treated as supply of services. Don't worry. It's all very technical. Never I say I've touched it. But if I say I'm going to test this area and tell that now evaluate whether it is supply of goods or supply of service. Right? Yes, your point is taken care. When I've written it, I've taken care of it. So here it is not only about stock, you're talking about the entire business. Entire business. So that is everything about your schedule 2, nature of supply. Talking about a small area where you're talking about whether a supply is a composite supply or a mixed supply, which will be very relevant for you to find out the rate. For you to find out the rate of tax. If at all you are dealing with 2 or more supplies having different rates, but you have to find out one rate, you should actually be very clear with the concept of your composite supply and your mixed supply. Now, before we take up that composite supply and mixed supply, you should understand certain terminologies. What is taxable supply? What is non-taxable supply? And what is exempt supply? By the way, whenever we are discussing the definitions, it's all from your section 2 of your CGST Act. What do you mean by taxable supply? Taxable supply is a supply where levy is there, where you have levy. Non-taxable supply where there is no levy or no charge. No levy or no charge. And they have also defined exempt supply. Right. When there is levy, whether there will always be collection. If at all there is levy, there may be collection, there may not be collection. Why there is no collection? The simple reason being, the rate of tax is 0% or it is 100% exempted. Either the rate of tax itself is 0 or there is some rate of tax, but if you satisfy some condition, it is 100% exempted. And when you talk about non-taxable supply, when I tell there is no levy, obviously there is no collection. If there is no levy, very clearly there is no collection. What about exempt supply? Exempt supply is defined to tell that it is talking about a scenario where the rate of tax is nil, 0%. The rate of tax is nil. Rather than writing 0%, better we will write it as nil, because 0 rating has got a different meaning. We are not talking about 0 rating. GST has got no connection with your accounts. GST has got no connection with your mathematics. So in your mathematics, 0 and nil may be the same. But in GST, nil rate is different. 0 rating is different. So we'll write it as nil. Nil means the rate of tax is 0%. We are not talking about 0 rated supply. The rate is 0%, or it is, there is some rate, but it is 100% exempted. It is 100%. It is 12%, but if you supply to government, it is fully exempted. 100% exempted, but it doesn't stop here. It tells that it includes non-taxable supply. If you look at things carefully, taxable supply includes exempt supply. How? Taxable supply talks about levy but no collection because it is nil rate or 100% exempted. Correct? But exempt supply includes non-taxable supply, because if you look at exempt supply, it talks about non-taxable supply. Do not bring your mathematics in between and tell that if A is greater than B and B is greater than C, therefore A is greater than C. No, don't bring that. Taxable supply includes exempt supply. Exempt supply includes non-taxable supply. Do not try to tell that therefore taxable supply includes. Keep your mathematics at home. Don't bring that logic. Taxable supply includes exempt supply. Yes. The definition only tells that taxable supply means there is a charge or levy. When there is a charge or levy, there may be collection, there may not be collection. So obviously, automatically exempt supply is included. Exempt supply includes non-taxable supply, because definition of exempt supply starts with nil rate or 100% exempted, but it includes non-taxable supply. But do not bring your mathematics and tell that therefore taxable supply includes not. No. Now you may ask why this is defined so. It is defined purposefully because there's one very important definition called as aggregate turnover, pan-India turnover, which we have been using a lot of times. Pan-India turnover. Aggregate turnover is defined to include exempt supply. Aggregate turnover includes, but exempt supply includes. So you'll include all the turnovers. When you're talking about aggregate turnover, you include taxable supply turnover, exempt supply turnover, non-taxable supply turnover. In aggregate turnover, they have not said aggregate turnover includes non-taxable supply. Aggregate turnover said that it includes exempt supply. But when you look at the meaning of exempt supply includes. So if at all I tell that as a taxable supply turnover 40 lakhs, exempt supply 20 lakhs, non-taxable supply, that is alcoholic liquor for human consumption or fine notified petroleum products 10 lakhs. 40, 20, 10. 40, 20, 10. What is your aggregate turnover? 70 lakhs. Your aggregate turnover is 70 lakhs. You got that? It includes taxable supply plus exempt supply plus non-taxable supply, because exempt supply includes non-taxable supply. So when you're counting your aggregate turnover, you'll even count alcoholic liquor for human consumption turnover. You'll even count fine notified petroleum products turnover. Why? Aggregate turnover includes exempt supply. Exempt supply includes non-taxable supply. Aggregate turnover includes exempt supply. Exempt supply includes non-taxable supply. Are you guys clear with this understanding? Right. Now, these are the definitions of taxable supply, exempt supply, and non-taxable supply. Now we are talking about your composite supply and mixed supply. Because in composite supply, there will be a reference of taxable supply. We need to know what is taxable, what is exempt, and what is non-taxable. Composite supply and mixed supply is defined in section 2. Section 230, composite supply, section 274, mixed supply. But the rate of composite supply and mixed supply is defined in section 8. What will be the tax treatment is given in section 8. See, there's a difference. Supply definition itself is in section 7. But composite supply, mixed supply definition is in section 2. Tax treatment is in section 8. How it will work? It is in section 8. What will be the tax treatment of composite supply, mixed supply is given in section 8. Section 8. Definition is not given in section 8. Tax treatment is given in section 8. Now, what is composite supply, mixed supply? What are the common points first? Common points. Both taxable, both composite supply and mixed supply talks about two or more supplies given together. Two or more supplies given together. So it talks about two or more supplies given together in conjunction of which each other. And it is given by taxable person. You'll find two or more supplies given together in conjunction with each other by taxable person. These are the common points. You're talking about two or more supplies given by a taxable person. Two or more supplies given by a taxable person. Now, what are the differences? Now, here it is two or more taxable supplies. Two or more taxable supplies. But here it is two or more individual supplies. Two or more individual supplies, because they are not related. Individual supplies. First difference. Second, in composite supply, they are naturally bundled in ordinary course of business. They are naturally bundled in ordinary course of business. Naturally bundled. Now, what is the opposite of natural bundling? What is the opposite of natural bundling? Artificially bundled. They don't give that, but they give a hint. It is not composite supply, which means it is artificial bundling. When composite supply tells that there is natural bundling of two or more supplies, and when mixed supply, they don't give artificial bundling, but they give a hint. They tell that it should not be. What is the meaning of that? Artificial bundling. Artificial bundling. Correct? Third, one of the supply should be principal supply. It is like your Iron Man movie, where the lead character is Tony Stark. Iron Man. Obviously, Tony Stark, but I'm talking about GST section is not clear, but we know everything about Iron Man. His character name is actually Tony Stark, and suddenly in the first part of the movie he comes and tells that important press conference that I am Iron Man. Right? Very good. Right? Robert Downey Jr. is excellent. But we are talking about what? There are other characters in that movie. Correct? But the principal character or the lead character is Tony Stark or right. One of the supply should be. And what is meant by principal supply? It's just like a movie. Principal supply is defined to tell that it is the predominant element of composite supply, the main character. But when you are writing in exam, it should write predominant element of composite supply, and all other supply are ancillary. There are other characters also. Assistant of Tony Stark. I know you know the name. I don't want the name. Right. You will have the assistant. You have a friend of Iron Man always being with him. Correct. He always bees with him. I'm not getting his name, but he also has that jacket at times, right? There are other characters also in that movie, right? But are they predominant element? No. They are ancillary. They are ancillary. By the way, we have seen the definition, and definition is given in the exact same way. Predominant element of composite supply, all the other supply are ancillary. All the other supply are. Now talk about Avengers movie. Now, when you talk about Avengers movie, please do understand that again there are multiple characters in the movie, right? Multiple characters in a single movie. So you're talking about you're getting for a single price, correct? Multiple characters in a single movie. You're getting for a single price. Single price is very important again. Single price. Same movie, you're getting all the characters. Whether there'll be any principal supply. Now you may tell that no, I like the character Iron Man, someone no Captain America, someone some other character, no, I like Ant-Man, Spider-Man, etc., etc., etc. All the nonsense stuff will come. But the fact is, someone will tell that no, forget about all the characters. The main character is Thanos. Right? The main character is right. Now the fact is there is no principal supply. There's no principal supply. It is given for a single price and it does not constitute composite supply. There's no principal supply. All of them are given together. There's no principal supply. Are you guys clear with this understanding? In one scene, Iron Man will have a very important character. In another scene, Captain America will have a very important. It seems that he is leading everyone, but no one listens to him. Right? In other scene, Doctor Strange will have a very important character. He is actually finding mind game and he's trying to make sure that different possibilities are coming. And that is the main, if you see movie from his eyes, he's the main character. He's actually changing in the possibilities. All the other characters are dependent on him. Please do something. What is the possibility? What is the permutation combination? Right? It is from different point of view. Right? So here, there cannot be any principal supply. The definition of mixed supply. If I were to make it more simple, first you have to analyze composite supply. If you are fitting under composite supply, don't even think of mixed supply. If you don't fit that, you won't see mixed supply. In composite supply, there are two or more. But in mixed supply, two or more. In composite supply, there is clearly given that you are talking about natural bundling. Definition itself uses the term natural bundling in ordinary course of business. But here, it is not clearly given, but it is given that it is not a composite supply. Here, pricing is not relevant. It can be single pricing or multiple pricing. Not relevant. You may give the pricing together or you may split the price. You may give it together or you may split the price. No worries. But here, very specifically it is given. It should be single price. It should be for a single price. Whether there is a principal supply in composite supply, yes, there will be one principal supply. There will be one principal supply. But here, in mixed supply, no one is a lead character, no one is a principal supply. There's no principal supply. There's no. This is coming out of the definition of composite supply and mixed supply. Composite supply and mixed supply read along with principal supply. Read along with principal supply. This is out of all these points are coming out of the definition of composite supply and mixed supply. Now, what is the tax statement? This is all taken from section 2. What is the tax statement of composite supply? The tax treatment of composite supply will be decided by whether Iron Man movie is going to be a hit or not. Will be decided by whom? Iron Man. The tax treatment of composite supply depends on that of principal supply. If principal supply is having 5%, entire composite supply will have 5. If the principal supply is having 18%, entire composite supply will have. Though there may be other supplies which are having 12, 5, etc. But entire supply will have 18, percentage. If the principal supply is having 28%, entire composite supply will attract 28%. If principal supply is attracting 28% plus compensation cess, entire composite supply will attract 28% plus compensation cess. If principal supply is 0%, exempt. Entire composite supply is exempt. Entire composite supply is but in mixed supply, tax treatment will be that of highest liability, highest rate of tax. So if you see Avengers movie, everyone will take different characters as a main character. But supposing the casting of Thanos is in such a way that he occupies the maximum screen space. He occupies the maximum. So obviously, the impression of Thanos in people's mind will be more. So what is having the highest rate of tax will be the tax treatment, which means if there is mixed supply containing 5 different supplies, having 0, 12, 0, 5, 12, 18, 28%, what is the rate of tax that will be applicable? 28% on all the 5 supplies. On all the, so if it is 5, 12 and 18, if 2 or more supplies are 3 supplies and it is a mixed supply, 5, 12 and 18, louder, 18%. Highest doesn't means 28. Highest means highest amongst them. Highest amongst them. Are you guys clear with this entire understanding? That is the tax. This tax treatment alone is given in section 8. Otherwise, all these points are coming out of section 2 definition. Tax treatment alone is given in section 8. Now, giving me examples of composite supply. A lot of examples can be there. Classroom along with book. Though if it is charged differently, also it is composite supply. Because the pricing can be single or multiple. The pricing can be single or, take your examples, right? The pricing is multiple, but still the fact is, it is composite supply. It is composite supply. Your education along with your boarding facility, that is hostel and mess. Again, it is a composite supply. In the first example, classroom along with book, what is the principal supply? Classes. In education along with boarding and mess, education. That will be decided by education, correct? So you can say, for example, you're going to a hotel, accommodation along with free breakfast. It's all naturally bundled. It's all very naturally bundled. You're traveling in airline and the sandwich is given free. It is nothing but air transportation service. Principal supply is air transportation. Got that? What can be the examples of mixed supply? You can have a lot of examples of composite. So what can be the examples of mixed supply? Grocery stores are excellent. You go to Big Bazaar and they talk about a package. They talk about a package. If you want to appreciate, it should be loud appreciation. It should not be only your own appreciation. Right? So when you talk about Big Bazaar, it is a package, combo offers. If you get a say washing machine, grinder is free. Combo offers. You'll get combo offers. It satisfies everything. Are there 2 or more supplies? Yes. Individual supplies? Yes. Single pricing? Yes. Is it a composite supply? No. It's not naturally bundled. You cannot think of a washing machine and a grinder. So it is not a composite supply, mixed supply. What will be the tax treatment? Washing machine, say 28%, grinder 18%. Or ulta, washing machine 18%, grinder which is free is 28%. 8%. Diwali gift box. When you talk about Diwali or some festival, there will be gift box. When you see the gift box, you'll have multiple items. You'll have multiple. You're talking about combo packages. You're talking about combo packages. It is all mixed supply. If it is not in natural course of business. Okay, I'll give an example so that you have clarity about it. I'll give you examples. Tell me whether it is composite or mixed. Yoga with accommodation. Yoga classes with free accommodation. Composite or mixed? There are extracurricular activities. Say for example, yoga class with, there's a yoga center which is telling that we'll have 5 days yoga classes specifically at a different place. Say for example, Uti, and accommodation. We'll charge for yoga and accommodation. Composite or mixed? Is it naturally bundled or artificially bundled? Naturally bundled. When you have such courses obviously such courses will demand accommodation. It is naturally bundled. What is the principal supply? If yoga is exempt, entire supply is exempt. If I change yoga with dance class, right? Dance class along with accommodation, that is 5 days special dance course. Say, for example, well-reputed dance. So, say Hrithik Roshan is coming here and is telling that he is going to offer 5 days dance classes at, say, a very good place. Say, for example, somewhere in northern part, say Ladakh, and people are going to go there along with accommodation, dance with accommodation. Is it naturally bundled? Yes, all these are natural. Whenever you are having a course, accommodation is normally expected. It's normally expected, naturally bundled. What is the principal supply? Dance. So whatever the tax rate for dance will be for the entire supply. Entire supply. That was the first example that we took for composite supply. Education along with boarding and mess. So classic example of composite supply. It is a classic example of composite supply. So when I said education, it's not only your college, schools, everything. So when you took this example, specifically we took this example for your composite supply. Education along with boarding and mess. It depends whether it is exempt or not. If it is schools or colleges, that supply itself is exempt, therefore entire supply is exempt. If the same thing is offered by a private academy, then principal supply remains classes. If classes is taxable, entire supply is. There's a difference between school, colleges and private academy. In both the cases, it is composite supply. In both the cases, principal supply is classes, education. But in one case, education is exempted. Where? Schools and colleges. Therefore, entire supply is exempted. In other case, education is taxable. Where? Private academy. Therefore, entire supply is. But the concept of composite supply is true for both. The concept of principal supply is same for both. Tax treatment is different. Tax treatment is different. Now, if I take an example of when you go to a shop, supposing along with your jean belt is given free, combo package. Jean with belt, composite supply or mixed supply? Composite or mixed supply? Is it naturally bundled? Artificially bundled. If at all you're talking about boost with tennis ball free, mixed supply. When I'm telling free, I'm trying to tell that it's for a single pack price. Whether it is free or not is not relevant. It is for a single price. When I tell along with paste, brush is given together. Just because they are used both together, it doesn't mean it is naturally. It is still artificially bundled. It is a classic example of mixed supply. It is a classic example of mixed supply. Are you guys clear with this entire understanding? Are you guys clear with this entire understanding? Whether it is naturally bundled or artificially bundled depends mainly on two important factors. The perception of the customer, the perception of the what he wants, and majority players in the industry, how they work, what they offer, what recipient wants and what suppliers are offering in that industry. What suppliers are offering in that will be an important factor to decide whether it is naturally bundled or, and this is actually very important because for at times you should know that industry to comment whether it is naturally bundled or artificially bundled. You should know that particular industry. In today's context, maybe motor vehicle with helmet is not naturally bundled. Maybe after 10-15 years, motor vehicle with helmet will be naturally bundled because all the players in the industry will be giving helmet along with it. As of now, no. So it has to be seen from that context. Now today when you purchase a motor vehicle, you don't expect a helmet. Today when the suppliers are offering motor vehicle, they don't give you always helmet except for few suppliers, correct? After 10-15 years, when the expectation of the consumer is along with motor vehicle, where is a special helmet, or all the suppliers by default they are offering, things will change. So what is now artificially bundled can be naturally bundled after years because it is dependent on industry, how it functions. Now other simple examples are there. Now if at all I give yoga example we have taken. Now we'll take a very simple example of books. Just think of this. Supposing the multicolor book that you're having in your hand, it would have been given to the printer. So I got a piece of paper and printing. What is the principal supply? Paper or printing? Paper or printing? Printing. So it is supply of service. Tax treatment will be decided by printing. It is not supply of goods paper. It is supply of service. Tax treatment will be decided by printing. But if I change it, if I am going to give, supposing a envelope, greeting card. Supposing there's an envelope which I go to a shop and I want to have an envelope so that whenever I go to some functions, I can have my name and my family name on that envelope. So I select an envelope. There are thousands of that envelope which are already there. Out of which I select this envelope and tell that I want these 1000 envelopes. But only one thing I demand. On these envelopes, please write my name. Vishal Jain and Praveen Jain. Just write our name. Best wishes, Vishal Jain and Praveen Jain. Now, already all those envelopes were ready. What is the thing that he has done? Yes, written our name. So again there is paper and printing. Again there is paper and printing. Correct? It is the same thing, paper and printing. But what is the principal supply now? Principal supply is paper now. Why? I went there for that envelope. I selected the envelope and the envelopes are already ready. Printing was ancillary. Printing was, when I went to the book printer for this book, paper was ancillary, printing was principal supply. That was the main ingredient. When I went to that shop for purchasing 1000 envelopes, that envelope is principal supply. The envelope is nothing but paper, is principal supply. Printing, best wishes, Vishal Jain and Praveen Jain is ancillary. Keep changing it. Okay, let us continue with that book. I got that book. I'm giving class with book. What it is? Again, it is a composite supply. Principal supply is class. I'm selling this book alone on my website. Now, there's no question of composite supply or mixed supply. There's only one supply. Supply of book, goods. Supply of books, that is goods. It will keep changing. It will keep changing. Are you guys clear? Right. Now, the other circulars which are there, we can easily try to understand them as well. Supposing I go and repair my two-wheeler or car. When my two-wheeler or car is repaired, I get an invoice finally. General repair, 10,000. Right. Then replacement of engine, 20,000. Replacement of tires, 3,000. So 10,000, 20,000, 3,000. General service, 10,000. Engine of car, say some engine of car or a vehicle which is expensive, 20,000. Engine normally will cost a higher amount. Replacement of tires, 3,000. Now, whether it is composite supply or mixed supply, 10 plus 20 plus 3. Service plus engine plus tires. It is neither composite nor mixed. Is it naturally bundled? Is it naturally bundled? When you talk about service plus engine plus tire, is it naturally bundled? No, it is not naturally bundled. So it is not composite supply. Let us evaluate mixed supply. For mixed supply, there should be a single price. There should be a, but what is given? Service 10,000. Engine 20,000. Tires 3,000. Is that single price? Why is it not naturally? Why is it not composite supply? Not naturally bundled. Why is it not mixed supply? So it is neither composite nor mixed. Very simple answer. Respective value, respective rate. If service is attracting 18%, 10,000 multiplied by 18%. If engine is attracting 28%, 20,000 multiplied by 28%. If tire is having 5%, 3,000 multiplied by 5%. Respective value, respective rate. Respective value, respective rate. There can be two or more supplies which is neither mixed nor composite. Day-to-day activities we are experiencing it. When you go to a confectionery store, you purchase multiple items. You get invoice of all those multiple items. Respective item, respective rate, respective GST rate. Correct? Respective item, respective price, respective. You don't have the concept of composite supply, mixed supply there. Are you guys clear with this understanding? Right. Now let us continue that example. Tires are taken. I am the mechanic shop owner. I get the old tires. What I'll do with the old tires? I'll give to a job worker who will rethread those tires. Rethread those tires. What he'll do? He'll take that tire, put sulfur, rubber in that, certain chemicals, make it refurbished tire, rethreading of tires, and again give it back. I am giving the tires to job worker. Job worker is doing his work and returning the tires. What is the work of job worker? Job worker is supply of goods or supply of service? Louder. Louder. Again, job worker is doing composite supply. He is doing the service. Along with service, he is using his own sulfur, rubber, other chemicals. They are all ancillary. They are all, what is the principal supply? Service. Using of rubber, sulfur, other chemicals is all ancillary. Is all ancillary. When I get the tire, I sell the tire. What is the supply? I get back the tire from the job worker, I sell the tire. Louder. Now it is only a single supply, neither composite nor mixed. It is supply of. It will keep varying. The same tire when job worker gave to me, it is supply of services because he did not own the tire. He worked on my tire. Right? Treatment or process done on goods belonging to another person. But while working on my tire, he has used his own goods. So that is service plus goods. But what is the principal supply? Service. When I got the tire back, I am selling it. So there is only single supply. So it's neither composite supply nor mixed supply. There is only single supply of goods. That will keep varying. That will keep varying. So everything about your composite supply and your mixed supply. Composite supply and your mixed supply. Section 8. Section 2 definition read along with section 8. The tax treatment of your composite supply and your mixed supply.